I clicked it. All right, looks like we're live.
Hi, John.
Hey, Chris. All right, so I'm John Tate. I'm here with Sell the Fucking Rip Trader, Chris.
That's
And,
me.
all right. So this is Trading Homework. It's a new show. And if you like it, don't forget to share the video with your friends and hit like on the YouTube like button. So anyway, let's get into it. Chris, today is it's Wednesday, March 2nd. It
Is it Wednesday? I
right?
thought it was Tuesday.
It's Tuesday. We're getting ready for Wednesday, March 3rd. It's Tuesday, March 2nd, 2021. Okay. So we're getting ready for trading on Wednesday, and so I've got a couple of details about that. We're going to be looking at some 1-inch punch trades, or some people call it lottos, where we've got very short time till expiration, and we're looking for good chart pattern setups, and then we can use very little capital and potentially make big gains on some options trades. But these are the way I set these up. We'll talk through it later. Is it's a low probability that the trade makes money. It's a high probability that the trade loses all the money. But when it works, it makes many times what you put in. So I've got a few of those ready to go. I've also got what I think could be the next short squeeze. We saw a real big one today with rocket companies, RKT.
I heard a lot of chatter about Rocket. I did not look at it.
Yeah, we should look at Rocket today, and I want to talk through Tesla also. So that's
Okay.
kind of the agenda that I've got. We'll revisit the Tesla and ARK theme. Oh, one other thing, I've got a non-alcoholic beer today.
Oh, look at you.
Yeah, it's from Well-Being. It's the Hellraiser Dark Amber beer. So I'm going to be enjoying this tonight. I'm doing a no alcohol night.
Where
But, sure do like
where
to
do you
enjoy
get
a beer.
where do
at
you
happy
get your
hour,
beer at?
and for me, this is happy hour. So
Where do you get your beer at? Because you come up with these really odd names of
Oh
beers.
yeah, so I've got a really great grocer down the street from me called Fresh Time. That's THYME,
Nice.
and they've got a thing where you can build your own 6-pack.
Oh wow.
Yeah, I think it's like $10 for a 6-pack. You just pick out, they've got just variety of beers out there, and so you can cherry pick onesies, twosies, and see if you like things. I found a lot of great beers that way. I had a really delicious one last night. I'll bring that one on the show maybe later in the week. But yeah, so they've also got a pretty decent selection of non-alcoholic beers. One of my favorite beers is Lagunitas, and I found that they carry a Lagunitas NA beer. So I'm gonna
Oh.
try that on the show too because it's my favorite beer. So
Yeah, the only
just
crap
about.
we have here for non-alcoholic is O'Doul's.
Yeah,
So,
O'Doul's is the popular one, and it's great that they
yeah.
do that. I mean, it's sometimes it's nice to just sip on one NA beer and like have that be your beverage for the night. I mean, I do that quite a bit.
Cool. Yeah, I quit drinking. Oh God, what is it now? 3 years? 2 years? Somewhere around there. I don't know.
All right, well,
Uh,
I hope these charts are coming across, and um, it looks like they are. I think people can see what you're showing. So before
great.
we get into any of those individual stocks,
hmm
probably looks like you're wanting to talk to SPY.
No, just happens to be up there.
Okay, cool. Well, the one I want to highlight first is DraftKings. That's DKNG. And so this is a 1-inch punch trade candidate.
Oh, is that a flag? Yep, that's a flag.
Yeah, it's not just a flag. It's breaking out to new. I think those are all-time highs, and
Yep,
this is kind of a cup and handle pattern. So it looks great on a lot of different time frames.
I do not see a cup and handle.
Well, I see it on the upper right chart that you have.
That's a
Hang on a
daily.
second. I've got to. Okay, there we go. It's your charts are lagged, so they're just now catching up for everyone.
Okay.
Okay, so yeah. Anyway, it's when I look for a cup and handle, I come from the old school like William O'Neill style, where I'm looking for a run up of I'm looking at the time frame in September to
Uh,
August of last year. That run up
okay.
that forms a peak, and
Right.
then I'm looking for um, ideally maybe a 30% correction, and
Okay.
we see that here. It's actually a little deeper than what I would like to see. Like when it has a 50% pullback, that's getting really a deep pullback. But then it's kind of making like higher highs and higher lows, but it's in a contracting range, and so that old high on the left side of the cup, which I called out in September, that's not exceeded until a handle is formed, and that handle is in February, that drop, and there's a real
That.
nice wick at the bottom of that.
Oh, okay. I see it. Yeah, I see it
Yeah,
now.
yeah, exactly. There you go. That's it.
Okay. Yeah. I would have never noticed that as a cup, though. For me, that's not a cup. But hey, if that flow, if the trade works,
Yeah, it's
then
definitely not a
I.
saucer, and it is a really deep base. But I mean, the stock did have a big run up leading up to that point.
Hmm.
So, but I'm not really focused on that part of the chart right now so much. What I'm looking at is on the much shorter time frames. Like here, yeah, let's zoom in on that because what I'm looking at doing is I'm looking to buy options that expire this Friday. And I'm going to either be getting a bull call spread or just straight up calls. I'm not sure. I may actually do both.
Do you want me to pull up the options chain?
Yeah, yeah. Let's take a
Okay.
look at the options chain, and the ones expiring this Friday, they're going to change fast. Like it doesn't.
New share.
One of the
Yeah.
things that's going to affect it a lot is whether the stock opens higher tomorrow or lower. So before we talk through these, Chris, can you give a moment for the screen to catch up?
Yep.
I'll tell you when it catches up, and then we'll start talking to it.
Okay.
So yeah, whether the stock opens down tomorrow or up is going to affect the price on the options expiring this Friday, which expiration date is March 5th, right?
Hmm.
Okay. Yeah, it's the video's still lagged
Oh,
behind.
excuse me.
There we go. Okay, the options change just came up.
Oh
So,
man, that water's kicking my ass.
all right.
All
Yeah, you're
right.
fine. Um, so let's see here. We need to go out on strikes. How far out on strikes does it go?
Oh, I can go all the way.
Okay, yeah. So set it to all the way.
Excuse
All
me.
right, looks like into the 90s.
Okay.
And I don't know that I would want to go out all that far.
It's gonna catch up.
Okay. So, well, on these columns, Chris, which one is the price of the option? I see price change.
The bid and the
The
ask, you
bid in
mean?
the okay, right there. Okay, so that's puts. I'm not seeing that on the calls. Oh, there it is. Okay, cool. Thank you.
You're welcome.
All right. Yeah, so we don't need to go all the way out into the 90s unless the stock gaps up a bunch.
Hmm.
So I mean, the ask on these are look real cheap in the 70s. So what I'll probably end up doing is if I can find value on the chain, then I'll go for that. For
Uh-huh.
example, like here's one I would not be interested in right now is the 76. If the ask is 29 cents and the one right below it is 19 cents and the one right above it's 24 cents. It's just that 29 is out of whack. And if you're not careful, then you'll buy ones like that.
Well, the
So
spread isn't. I mean, the spread's about the same. Oh no, it isn't. No, yeah, the spread's. Spread's about the same.
Yeah, but I mean these are do or die. You know, it's if
Right.
I fill on these things, like I'm not flipping out of them unless they explode to the upside, and then they'll catch a real big bid.
Well,
And
if you're going to do
so
that, I'd want to do a Delta 10 then, or a Delta, yeah, a Delta 10, which is the 24 cent.
yeah, okay. And what's nice about that one is it's a 75 strike, which has a lot of open interest. See how the open interest is much higher.
Yeah,
So
well,
what's nice about that is,
you see this green number right here, 4,746.
yeah,
That's how many of those were either bought or sold. No, I'm sorry, because it's green. That's how many of them were bought uh, today.
got you. Okay, and so I really like that 75 strike. I hope that stays cheap. So if the stock opens flat, we can expect that these options are probably going to drop even more.
Mhm.
Um, these out of the money ones, but I mean they're not going to drop that much. I mean they're almost zero already. So if you
Right,
look at the chart for one of these options, I'm not saying to go to it, but I mean it's what has happened is that option has it probably at one time might have been worth a lot more because it had time value, and the time value is all squeezed out of it. So it's nothing really left but juice if it goes into the money. So we're trying to exert a lot of force without giving much energy, and so that's
right,
why we're looking at this specific setup.
right. Well, you'd be surprised what the call side 10 Delta looks like. I have it coming up, so give that a little time to catch up and go ahead.
Okay, yeah. So I like the 75 call a lot because it's got a ton of liquidity, and that it will be helpful if the option goes into the money or way into the money, and we want to do something like roll up in strikes. Then it means that there's going to be a lot of buyers and sellers for that contract. And if I'm trying
Right,
to sell it at the same time somebody else is trying to buy it, it's a lot of times you can split the bid ask spread with the other party, and so you
right,
can fill near the midpoint. So it's in the event that these options go into the money, it's really helpful if you're on a more liquid area. So
right.
that's something to be mindful of with this.
Cool.
Yeah. So DKNG that's my number one setup for that I'm looking at for tomorrow and the day after. So here's something else, Chris, is if the options get expensive and what's the implied volatility on this one?
Oh,
Can you see
that's
that?
up here. You see that right there?
Okay, yeah, cool. So if that gets a lot higher tomorrow, I want to just talk through war game out a few of these scenarios. So if the implied volatility skyrockets higher because the stock gaps up real big or something,
Uh-huh.
then because there's still 2 days till expiration from Wednesday, what I may end up doing is going into a bull call spread instead, just to
Uh-huh.
keep my price point real low and keep the punch on the trade real high. Um,
Mm-hmm.
so if that implied volatility gets high, I may look at a bull call spread, but from what I'm seeing right now, I don't anticipate that.
Well, can you sell one farther out?
Yeah, exactly. That's what I'd be doing. It would
Oh, okay.
be yeah, it would
Sorry, I
be
missed that
buying
part of
one
it.
and then selling one further out of the money.
All right, cool.
Yeah,
Yeah,
and
that
so
sounds like a
you
plan.
could put more contracts through that way, and it also is a more likely outcome. So, buying an out of the money call has already an unlikely odds of being successful,
Right.
but especially with so little time left on it.
Uh-huh.
But you can improve the odds by uh, buying calls that are closer to at the money and offsetting the cost by selling calls that are further out of the money. So I have done this with puts on Tesla. I think it was today I put that trade on. We'll talk about that one
I think
a little later.
I think I found a strike that might work for you. Um, it's in the March 12th.
Okay.
It's the 80 strike, and the bid, which is what you would be crediting, is 37 cents. You should have that chart up here in a minute.
Okay, yeah. So are
So
you
you
talking
you're
about
gonna
selling
you're gonna
one with
buy
more calendar
you're
on it?
yeah, you're gonna buy the 75 for 24, and you're gonna sell the 80 for 40 cents. Well, I'm sorry, for 37 cents.
Yeah, so that could take a lot of margin
I don't know.
potentially, but maybe not. Can we see what the margin impact on that would be? I think it would be.
I don't know how to do that.
Yeah,
I
okay.
don't ever look
I
at that.
might be able to check that. Um, Let me see if that's something I can check. Okay. Um, yeah, so you can't see it probably, Chris, but I'll call it out what
Okay.
I find.
No, it's not. I just don't know how to do it. I have to
Yeah,
learn how to
I'm
do
not
it.
actually sharing my screen with Chris. So okay, here let me put it in. We're talking about buying the
It's 75.
75. Oh, hang on, that's wrong. Strategy builder. Okay, buy the 75 from March 5th and selling the 80 on March 12th. Okay,
Correct.
so here's what I find when I look at that. At expiration on March 5th, that caps the potential gain, but that can be okay. That's fine, right? Like that's what it does.
Uh-huh.
So let's see here. You would want to close the short leg out by Friday also.
Right. Well, how hopefully Thursday. Hopefully you'll get your move tomorrow.
So the margin
But
impact on that
yeah,
is so it is a credit. You
right.
could put on this combo for a credit. The
Right.
margin impact shows $717
That's not that bad.
per combo that you put on.
So you do two contracts
Yeah,
and you're not digging too deep into your portfolio.
yeah. The thing that I don't like about this though is that
Hmm.
because that margin impact is showing 717.
Hmm.
The thing I don't like about it is the most that you can make on a percentage basis from what you invested is um, less than 100%. However, the good news is if DraftKings goes down
Hmm.
and you close out the short leg by Friday, then this is it's sort of like it's a back spread basically.
I don't believe it's going to get
I
above
mean, it's not
75.
a
And
back
when you're
spread.
ready to go to the chart, I'll show you.
It's you would actually essentially have the trade for free if DraftKings went down.
Right. So when we go back to the chart, I'm going to show you what I
Okay,
see
go
and
ahead.
what you ready to do that?
Yep.
Okay.
Yeah, we're showing your screen now. Go ahead, Chris.
All right. So I'm going back to the chart now. Let me know when it shows up. So what I'm seeing here, and you had said something about pulling up the 75 strike, the actual options chart.
Yeah, yeah,
So I went ahead and I did that. And you were concerned that it was, or you were saying that it would have been very expensive and would have went down to a very low price, right? And what surprised me was it is in a channel, a big, long channel. It's a two deviation, but it's
mm-hmm.
still a channel.
Yeah.
So let me know when that pulls up.
Okay, I see it, but the video's like, okay, it just came up for everyone.
Okay, great. So what I'm seeing here is in the bottom left.
Okay.
You see the outer band, the Bollinger?
Yeah.
You see where it's resting on that trend line?
Yeah.
What I'm thinking is that it's going to get up to here and it's going to get rejected, and that's going to form a squeeze as time progresses, and then it's going to roll over and die. This is the options chain of
It
the
could. I mean,
75
it's
strike.
kind of dangling up.
Right.
It's kind of dangling out there.
when I see a Bollinger Band and a trend line like this trend line I drew right here,
Yeah.
when I see a Bollinger Band like that and it lines up with the trend line like that,
Hmm.
I'm thinking that it's going to die or it's going to go flat and just, do one of these consolidation
Yes.
things.
So the other thing it can do is it can explode higher if it blows through that.
I doubt it because you see the trend line of these blue bars and you this is my accumulation distribution down here. Nobody's accumulating anymore. That's already oh, I'm sorry. Nobody's yeah, I'm sorry. They are starting to accumulate now. Sorry. When this goes down and it starts going into a compression,
Hmm.
this is the end of the accumulation. Or yeah, I'm sorry. This is the end of the distribution. Jesus, get it right, Chris. So this is the firing off of the distribution. Now it's dying off. It's going to go into a compression. And it's going to go along, and then it's going to fire off into a distribution again. But I
And
believe that that
resistance
did
is set. It hit 70 and it didn't like it there. There was some selling came in.
right. So I believe that this is your sell the line right here.
Okay, well, I mean that's not a whole lot of juice, I mean, like if I'm buying these things at 20 cents a pop or whatever,
Hmm.
really what I'm looking to do is hold it overnight and see a big gap, and like
Hmm.
if it gaps higher, like through that line, that's the trade. Like if it doesn't do that, like I'm not looking to, the commission in and commission out plus bid ask spread on options so cheap, I mean these are throwaways.
Well, then this may not be the 1 inch punch that you're looking for because I don't see it, but that's just my opinion.
Yeah, well,
You know,
and that's okay. I mean, the main thing is it's at new highs, right? And it's
right,
also from a breakout level. Looking back at that prior peak in September of
right,
2020.
and
So
it's a
that's kind
bull
of the play.
flag.
Is like in the next
It's
two
a bull
days, is a
flag in the
gap.
hour.
Do we get a gap up?
Right,
And so you really have two shots. You've got, going into tomorrow's trading day. So from Wednesday, you've got Wednesday night, and then you got Thursday night.
right.
And if it does move, if it gaps up like 5-10%, I mean, do the math on what that is. It's pretty big.
Yeah. Oh no, I agree with you. And the good thing about this trade is that you still got a 16-cent credit per share. So, I mean, it ain't the most amount of money in the world, but you're getting paid to take a shot at a what a four bagger,
Well,
five
for
bagger.
which one? If you're selling the 80 from next week out,
Yeah, you're still getting the credit on that,
yeah.
right? And if this thing does explode higher, and it even if it wicks to 75, you got your trade in, right? You're gonna go at the money in the money, correct?
Yeah,
So,
yeah, yeah. Because we're talking
I
about buying the 75. So if it
right,
goes up there, you're saying like, hey, there, it may not hold. I mean, the option you bought is going to run faster than the option you sold because of the time.
right.
So yeah, I mean, if it does that, probably you would want to sell with the combo that you put together because
But what
the
I'm get
profit on it is limited anyway.
but what I'm getting at is you even if it doesn't come to fruition, you still have that credit.
Mm-hmm.
It may not be much, but it's not a
Yeah,
complete
and
bust.
and you almost want to see it go down instead of sideways if that happens because if it stays where it's at, then it's there was a dip there. Let me see if I still have it up. I do. Yeah. So if the stock is near 75 on Friday,
Mhm.
that's like the worst case scenario. That's where you start dipping into your margin.
Okay. I don't
So
sell a lot. I don't do credit spreads because I don't have the capital to cover on assignment.
well, yeah, you're unlikely to get. It would have to go over 80 for that option to be in the money that you sold. And it's
Well,
unlikely that that would get exercised. Although, I mean, it could.
I mean,
So
you're taking a chance on, hoping that it doesn't happen, but it can. It could happen at any time during the trade. And if you get stuck like Chuck, then what do you do? You know,
yeah, well,
you got
okay.
you got.
So just looking at the 75 call,
Hmm.
I brought it up in the little simulator, and
Right.
and if we get a gap up, like I'm talking about, like a 10% gap up,
Yes, sir.
then and that goes to 75.
Hmm.
If you get that gap up, let's see here. Where is the option on March 4th? Um,
March 4th. You mean March 5th?
no, on March 4th. I'm looking at if I bought it tomorrow, which is March 3rd. So on March 4th, it looks like that would be worth just a little under $2 for the option. And so going from 24 cents to just under $2, that's almost 10x.
Yeah.
So that's the kind of move that I'm talking about, and you don't know how big this could run. I mean, it could. What I would probably do at that time is roll up on the trade.
Uh-huh. Close out your sell. I mean, yeah, close
Yeah, I
out
would
your
I would sell the 75 and probably roll into like an 80. What that does
right.
is it like locks in the trade. It locks in a bunch of gains, but it like keeps money on the table in case it runs again the next day. I'd be looking for the Thursday to Friday gap also.
Hmm. Okay.
Yeah. So and that's we talked through that GameStop one from last week,
Right.
and I actually did that. That worked out great.
Nice.
Yeah, I mean that was at one point that trade was up over 100x on the money that I put in, which is not a
Nice.
lot, but when you're getting 100 times your money, it doesn't take starting with much to turn into real big numbers.
You mean 100% ROI or 100 times your
I
money?
mean 100 times my money.
Wow.
Yeah, and so what I did is I rolled up, and what I didn't do was roll out. In hindsight, I probably should have rolled out with some of that, but I didn't, especially Friday
Uh-huh.
morning. The
Uh-huh.
problem is it was halting all the time, and there wasn't really a whole lot of windows of opportunity where I could move the trade around all that much.
Right.
But
I can imagine the margin was sick.
the what?
Did you have margin on that? No, well, let me ask you this. Did you buy it outright or was this an options play?
Yeah, it was just an outright option. It was not a bull call spread. It was just options.
Oh, okay. Okay. Gotcha,
Yeah, so
gotcha.
what I did is when GameStop was at 50 last week, I bought the 75 call. And
Hmm.
I got it for it's a very similar trade setup to like what we're talking about right now. But
Hmm.
one of the key differences though, and you've already hit on this, is what we're not seeing with DraftKings right now is we're not seeing that like really monster setup on the on like an intraday chart. And GameStop did have that. It was Wednesday around lunchtime when I bought the trade, and I almost texted you, Chris. I almost said, "Hey, you got to take a look at this," but I
Right.
didn't, and I'm regretting that now.
Nah, it's good.
Yeah, but I mean, these opportunities they do come around. Like we saw it similar with Rocket Mortgages today. In fact, like I want to take a look at the
Oh, is that who that was?
RKT.
Yeah. That was
I'm
Rocket
going to
Mortgage.
look at
I know
RKT real
Rocket.
quick, and I'm
I
going
know
to talk
Rocket
through so that you
Mortgage.
can be putting it up on your screen at the same time. You just be looking at some of
You
the
want me to
same
put
things,
Rocket up?
huh?
Did you want me to put Rocket up now?
Yeah. Go ahead.
Okay.
I've got it in the options combo builder, but I mean, half of your screen is showing, the other half is mine. I'll put it on yours too when you're speaking to it. But let's take a minute to look at this because a lot of people were posting some pretty wild gain graphs or gain P&L screenshots
I
today
bet.
for
I know Rocket.
RKT.
I haven't done business with Rocket, but I almost did. So I kind of know them.
Yeah, it's this has been on my radar too for a while, and there's a lot of
Good for
different
them.
screens that it comes up on. So first of all, let's look at the intraday chart before it broke out. Sort of like what we did with GameStop last time. We looked at what led up to that breakout because getting your eye right for spotting these things is really important, so you're not wasting money.
Hang on, let me change up my studies real quick. Will that work? Yeah, that'll work.
Okay, so I'm looking at 30-minute candles, and I see like a perfect cup and handle on there, Chris, at like $24, but right before the big breakout, and it looks almost like the same thing.
Do you see my chart?
One, where it just starts riding up. So here, yeah, let me put it on your screen. Go ahead. Yep. And so this is the key ingredients: is just a few days till expiration or less, a chart pattern, and also like a really favorable implied volatility situation where maybe there's like been a drop in implied volatility.
Right.
And so, having that chart pattern is really key. And so before I go real big into DraftKings, I'm going to be looking for that kind of cup and handle. And then, the way it broke out, it was slowly at first and then just exploded. And it starts stair-stepping higher. And this also shows that, like, you can let the trade develop before you get in. Like, if you look at it, kind of riding and stair-stepping higher, there was still like lots and lots of time to get in this. You didn't have to get in right at the first breakout.
Right.
But you had to pay up after that point, though, if we're talking about short-dated options.
Right. What is their IV? Oh, wow. Okay.
Well, it's going to be huge now. I don't know what it was before, but I mean,
I'm looking for puts. I'm not worried about the calls are exploding. I'm looking to sell this thing, and you already know why. At least I would hope you would know why.
Well, yeah, you're seeing that roll over. You're seeing the those bars dropping.
There's that
on the oscillator you've got there.
It's gonna do a double top from what I'm seeing, which I'm not concerned about. What I am concerned about is the forbearance and the shadow inventory that's coming.
Yeah.
So there's the whole mortgage side of the next couple. Well, not the next earnings release, but the one after that, September. I think is going to be really, really bad for them.
Yeah, and I retweeted something a little earlier today about this that I wanted to.
LeDuc?
I think I retweeted it. Maybe I just liked the tweet. Hang on.
Was that LeDuc? The LeDuc tweet?
No, but I mean, we can talk about that one too. I did want to talk about that.
Okay.
So, hang on one second.
I'm glad you turned me on to her. I like her stuff.
Oh yeah, she's fantastic. Great analyst, and she's got technical skills, and she understands finance, which makes it really great to listen to her content. So,
yeah, her name is Samantha LeDuc.
Yeah, Samantha LeDuc. Do you want to talk through her tweet real quick while I find this other one?
I don't even know where it is right now.
Okay, I'm looking at it right now. It says more to the RKT story. They reported refi applications were coming in at their fastest rate ever. Think home equity withdrawals, aka 2005 to 2007. And then she retweets herself from an hour prior. She said, there's short interest and then there's share issuance to short. Via bespoke investment, 94% of Rocket's market cap, $79 billion, is in share classes that don't actively trade. The market cap of the Class A shares which do trade is less than $5 billion.
Here we go.
All right, go ahead.
No. I'm still trying to get to it. I got more to the Rocket story. Is that what you're saying?
Yeah.
They reported
I just read
refi
that tweet. You want to talk through your reply?
Yeah. So she pretty much said that the refi applications are exploding. And I can understand that because everybody's pulling the equity out of their homes because everybody's broke as fuck, right?
Yeah.
So we got this pandemic thing going on. The government isn't giving us any money. It's all going to other countries. So I wrote, yes, ma'am. John Tate and I have been all over this upcoming global financial crisis 2.0. Wait until the shadow inventory hits the 6-month supply later down the road. Now, what that means is, for those of you that don't know a lot about real estate, a shadow inventory is inventory that is coming and that most people know about, but has not hit the market yet. If you're not in real estate, then then you wouldn't know about the shadow inventory. But those that watch the real estate sector, they know what that is. So the shadow inventory is, you know how we have forbearance, right? So there's forbearance forgiveness right now. There's a moratorium on kicking people out of their homes. Great, that's awesome, and I think that, you know, it's a great idea. But unfortunately, it's going to kick them in the ass later down the road, and here's why. When that stops, when that moratorium is lifted, then depending on how your mortgage was structured and depending on your lender, they might be able to put that onto the end of the loan, and they might not. They may not do that. And if they don't do that, that means you got to come up with, let me see, let's just say 7 months, maybe 6 months of mortgage all at once.
Yeah, scary stuff.
And it's doable today. You know, as soon as the moratorium's lifted, you know, there's like no time. Yeah, and you can't make, you know, like extra payments, you know, like your mortgage is $700, $800. You know, well, if I give you 1,000, can we do it that way? No, no, you can't. I already know the answer to that one.
Mm-hmm.
So we're looking right now. We're staring at about 2.5 to maybe 3 million of shadow inventory, and that's just pre-foreclosure, right? That's not including the people that haven't even hit pre-foreclosure yet. So the rest of my tweet is, I'm a buyer right now because I am in the market. And the first thing that I'm looking at is an investment property, which, you know, a duplex or a quad, because when all these people get kicked out of their single family homes, they're going to have somewhere to live.
Right.
They got to have some place to live. And, you know, investing in a duplex or a quad, that's just, you know, it's like doing a credit call credit spread. You know, you're living in the house. I mean, granted, it's an apartment, it's not a house, but you have a place to live, and the people around you are paying off your mortgage.
Right.
So,
yeah, it's a smart way to go. I mean, a lot of people have had success with that.
Right.
So I want to read you a tweet, Chris, that this one is from the Market Dog. And he's saying a similar thing like you. So I'm showing it on the screen, but I'll read it to you. And here's what he says. For me, the reopening can sink markets. And then he has 4 bullet points. 1, the end of the free money narrative. 2, start of the bankruptcies. 3, start of the housing bubble problem. And 4, more money going from the wealthy to the economy instead of the market.
Right.
So
I feel it. Yeah, he's right.
Yeah, I mean, it's a pretty good take, I think.
Yep. Yeah, and it's unfortunate because, you know, the government and the Fed is not honest. You know, there should be a disclaimer that if you choose to take this moratorium, this is what you need to know up front. Here's your full disclosure, right? You know, like in every contract, you have to have a full disclosure. And the government is giving you money, but they're not giving, or they're giving you time, which is equal to money in this case, and they're not giving you a full disclosure of what is most likely going to happen.
Yeah.
And that's where the government is wrong, in my opinion. They're not letting people know, look, at the end of this, it may come due, all of it at once.
Yeah, it's good. It's definitely going to be a hardship for people.
Yeah.
How that gets sorted out, I mean, I don't know. Maybe they're thinking like, oh, well, we gave you stimulus money, right?
Yeah. What'd they give us so far? 35, 3,000, somewhere around there?
Yeah.
Dude, and how long have we been going through this? 6 months? Oh, no, a year.
A year. Yeah.
Yeah. $6,000. I mean, $3,000. Thanks.
Yeah,
What
it's
the fuck is that
terrible.
gonna do?
So, Chris, I've been doing some screeners before we went live, and I have a FinViz screener that I want to pop up on the screen.
Sure.
Because something interesting came up. Shoot. Something interesting came up on this screener.
Cool. I need to grab some water while you're doing that.
All right.
My mouth gets really dry when I talk. I'll be right back. You hear me?
Yeah, I hear you. So what this screener is, you can go to FinViz, and it's a real simple one. It's just two filters on the screener. It's optionable and shortable, and then the float short is over 30%, which is the highest setting that they have on the free screener. And I think I sorted it by volume. And so Rocket Mortgage is the top one right now. And you can see on the chart just this huge explosion on the FinViz screener. And this screener, it pops up things like GameStop and I think AMC was on here recently too. So it's got this thing, FUTU. These are not the ones I wanted to call out. So I went to the page 2, and that's where I found a really interesting looking chart. So MREO. And by the way, for people who don't know how I'm using the screener like this and seeing the charts, like if you put in these filters and then you pick a sort, so like here in the overview, you can sort. I sorted by market cap. That's what it was. And then if you go to charts, then you can see the charts and it preserves the sort order. So anyway, this stock, MREO, it looked great. So I kept digging into it. And it does have options, which is nice. But, I mean, there's a resistance level around $4 or $5 a share on this thing. And it looks like it's trying to break out right now. We see big volumes starting to come into the stock. And when I looked on Yahoo Finance, I didn't see, they have different numbers. So the short percent of float on Yahoo Finance for MREO, it doesn't say, but it says short percent of shares outstanding is 8%. And so the float looks like it's a little less than half of the shares outstanding. So I'm going to guess that Yahoo Finance numbers don't exactly agree with the FinViz numbers, but maybe it's close enough. So, I mean, this could be a very explosive situation. And this stock does have options too. However, they're monthly options. And it's got, I only saw 3 strikes. I saw a $2.50, a $5, and a $7.50 strike. So when I zoom in and look at the daily chart, it looks pretty good. I would much rather if this stock had weekly options, because I'd rather just go 1 week at a time and not have to put in as much money. But the setup looks good, so there are a few ways to do it. Probably what I'll do is just kind of go for the 750s at nearest term expiration and just keep throwing little bits at it here and there until it pops, if it's going to pop. And because it hasn't yet, I think I can be a little patient with it. So what are your thoughts about this one, Chris? MREO. I lost your audio. Yeah, I'm still not hearing you talk. Well,
The hell
hey
happened?
Chris, while you're working through that audio issue, I'm going to go into Interactive Brokers, and I hope you can still hear me. If we have to reset the Zoom call, then we will. But I mean,
Can you hear me
probably.
now?
Hello?
Can you hear me now?
Yeah. All right. Cool.
Sorry, apologies. I
Oh
was
yeah,
looking at a
you're
cup. I was
fine.
looking at
Go
a
ahead.
cup and handle on MREO in the 2-hour chart. That's what I was trying to tell you.
On the 2 hour chart. Which one's that on your? Which window is that?
Bottom
The
left.
bottom left. Okay. Yeah. I mean, it looks pretty good.
Yeah, it looks like a continuation cup and handle.
Yeah, and when the share price is this low,
Hmm.
then maybe I'll just go into the shares instead. I don't know.
Yeah.
If it's marginable, then that helps.
The 17-day Oh God, this thing looks like shit. I wouldn't even think about options on this thing.
Why is that?
The IV is 252%, and the spread is 20 cents on one side, and then it's 40 cents on the other side.
Yeah, but if you look at the 750,
It's
it's like
750.
30 cents or something.
Oh yeah, I see it.
Yeah, the March 750. So if you
Oh yeah,
catch
the
that on a
spread's only
down
five
day,
cents. Uh-huh.
you see where I'm going with this? Like if you
Yes,
catch
I
that on
do.
a down day, then maybe it's okay. It's still got like some weeks to go, a little over 2 weeks to go.
Yeah, yeah, yeah. I guess you could, do maybe. Well, what's the open interest? 1,200 people or 1,200 contracts, rather.
Yeah, it's not much.
What's a 45 day? Oh, that's even
So
worse.
I mean, the nice thing about buying the shares is you don't have a timetable. You can kind of wait it out.
Right. Absolutely. And
Yeah,
you're
so I
and
don't know if
you're
this is marginable, but that's something I would check. If it's marginable, I mean, I'm kind of inclined to just buy the shares. But if it's not marginable, then I like it less.
uh-huh.
You know, so anyway, this one jumped out at me. It looked interesting. Looks like it's setting up. So
Yeah, it does. Oh, let me get rid of that. Oh, there it
yeah,
goes.
sorry.
That's all right. It's just my mail. All right. So, okay, cool. Yeah, I like it. I do like it. I will look into that. Actually, you know what? Let me put it on my watch list.
Yeah. So those were the two that I had on my watch list. Is there anything else on your radar besides before we get into like Tesla and stuff?
Oh yeah, hell yeah. Uh, our favorite, uh, CRSR.
All right. Yeah, I haven't looked at this one in a little bit.
It popped up because I had an alert for and it's going to take a minute for the screen to catch up. I realize, but when you see it, you'll on the top right, you'll see it. What I'm talking about. I thought that it was only going to get down to 38, and lo and behold, I put another alert on there just in case, and it sure did trigger it. Do you see it yet?
At 38, where it fell below it.
Yeah,
Yeah. So
35,
I mean, this to me looks like what was support is now kind of turning into resistance.
35.50 was my alert, and it closed at 35.45. If you see that support line right here, you see that red
Yeah,
line all the way
at
across.
around 35. Yep.
So that is now a definite buy area for me. I Even if it's a short term buy, I would I would start accumulate. You know what? No, I would start just accumulating here.
And so, are you eyeing that it's going to maybe go back up and retest the top end of that range between 45 and 50?
I think that 37 is a no brainer, and then the next one up is going to be 40, and then the one after that is going to be 41, and then the one after that is going to be 44. Those are my key levels that I'm looking at. And if I throw a fib on it real quick, I wouldn't be surprised if it tells me the same thing. Come on, dude. Let go. There we go. So let me pull one of these up so you can see it
All
better.
right. Hey,
This is the.
the charts are way behind on the
Oh, okay.
stream.
Yeah, no worries.
So, yeah, just talk us through the
So
levels you're looking at.
so the levels that I called out, lo and behold, they
Yeah.
happen to be the fib.
Yeah, you got the fib eye.
Yep. So we got the 38 here. We have the 40 here. We have the 41 here. We have the 43 here. And the 618 is a great place for it to get to, and pause. If it gets to the 50 and it turns around, get out.
And that's
I'm
at
telling you.
just under 42.
Yeah. So that's, I would start accumulating here. You got a nice double bottom. It's right
Yeah.
at that line of support. And if it pauses here at the upward channel, I would not get too afraid unless the market is tanking, because rising tide lifts all boats. Well, a lowering tide beaches
Yeah,
all
I'm
boats.
glad you got into that because that's what I wanted to ask you about next. Is I've seen an unexpected weakness with Nvidia, and so you probably recall like I've been pretty bullish on Nvidia,
Right,
and it has not cooperated. And so and it's not just Nvidia. A lot of the tech space seems to be getting weak right now,
right. I'm
and
just going to pull up the daily
I
on
mean,
this.
Nvidia went up and made a new high. It broke above the top of that range and then fell apart. And it just really should not have done that.
Well, if you look at when my chart pops up, you'll have a good answer why.
Yeah, I see what you're drawing there, and that's a good eye. I mean, it hit that resistance level, and it was like a mega force. I mean, it just knocked it
Yeah.
down really hard. So I didn't have anything but really short dated positions in this.
You know what? I'm gonna change this into a channel.
Okay, yeah.
Wow, that's nice.
So
If it
it's
keeps, dude, if it keeps doing that, that's a one standard deviation. You can make a lot of money up and down off of that. I did that with IYR back in 2017. The thing just stayed in the channel for freaking ever. And every
yeah.
time it hit the other, once it hit the lower channel, boom, I bought. When it got to the upper channel, I bought puts. I was like,
Well,
this is so easy.
and
This is the
because of
easiest money I ever
the
made.
overall market weakness right now, it's
Uh-huh.
so Nvidia was going sideways while the market was going up in that channel for a long
Right.
time.
Uh-huh.
And so I think that there's an opportunity here where you could essentially like maybe buy strangles or something like that. Um, if it when it hits the bottom of the channel. So in other words, like don't just play for it to go back up to the top end of the channel, but also play for it to, if it crashes through the bottom of the channel, it could really fall far. I mean, we could be talking about, on the backdrop of a falling stock market. Yeah, it could go down to 500 pretty easily.
Right. Sorry, I was checking the measured move of this cup and handle I just saw.
Okay, so by the way, the stream is still showing Corsair, the Corsair chart. Like that's
Oh,
how
really?
delayed
Oh,
it is. Yeah.
damn. Sorry.
Or no, it's
Yeah.
still showing MREO. So I mean it's so far behind now.
Wow.
Yeah, so let me bring it up on my screen
Yeah, sure.
to show everyone what the channel that you're talking about.
Okay.
Let's see here. I have to zoom out some. Yeah, so on a weekly chart, the channel that Chris drew. Well, maybe I can get it on a daily. Hang on
No,
a
it's a
second.
daily, yeah.
Yeah, let me just zoom in some. Okay, there we go. Now let me hit annotate on this. And I'm going to use their line tool, trend line. And the channel that Chris drew looked kind of like this. Oops, I messed that one up. Yeah, so that's the channel that Chris drew, and then probably there's a horizontal line I want to draw in there too, from where the channel starts, and so this would be a target to a breakdown out of the bottom of that channel.
Where did you draw the horizontal line?
Yeah, and it looks like it's drawing that horizontal line at around 465. 470.
465, 470.
Yeah. So that to me
Oh, I
looks
got it.
like a
Okay.
target if it falls from the bottom of the channel. And of
Right.
course, if it goes back up to the top of the channel, then probably a 650 target or
Right where that
thereabouts.
gap got filled. Yeah, okay. So let me throw a fib on this and see what we come up with.
Okay.
So I'll do it from the top of the bottom of this cup.
Okay,
Uh,
yeah. So now it's caught up to where it's showing the channel lines you drew on your chart.
okay,
It'll take a
cool.
little time for that fib to come up.
It's kind of close to that base that you just called
Yeah,
out.
the 450 level is showing a 38% retracement.
Uh-huh.
Yeah.
Let me throw another one on here real quick.
And the level I drew was like 465, I think.
Yeah, it looks like a good number because we got the 38 and the 61 hitting together. Actually,
Yeah.
they're all hitting together.
So I mean, and
On a
that's a really nasty drop.
It would be.
Yeah,
Yeah.
but I mean, I think that kind of thing can happen if
Oh, no
Arc.
doubt.
Yeah, I mean, Arc could be like a catalyst for a lot of tech going down. Now, I don't know that Arc holds Nvidia. I don't think so, but there's a big overlap with the Nasdaq, and Nvidia is a big stock in the Nasdaq.
Yeah, it is. I don't see much on ARK. I just pulled it up. Oh,
Yeah,
damn, my system's starting to slow down. What's up with that?
yeah, I don't know. I can still hear you fine. Yeah,
No, my
let
charts
me
aren't pulling up.
bring out. I'll throw the arc chart up because it's your video's behind us.
Well, I got this one. Oh, BlackRock? ARK is part of BlackRock?
It's ARKK. You've
Yeah.
got the wrong one.
Oh, KK. All right.
Yeah.
Maybe that's why it's not pulling up.
Yeah. So
All right.
I mean, this thing is looking kind of rough.
Oh, there we go. Okay. Yeah, that looks like the Nasdaq.
Yeah. So if we compare it, and the other thing is like
I
pretty
bet it
big
pulled. Yeah,
volume
all my
coming
other
into these. Yeah,
all my
it
other
looks a
charts
lot
pulled
like
up.
the Nasdaq, and that to me, like it just if this rolls over and makes a new low, we could we could be set up for a really big shakeout or even a tech panic. I mean,
But
I
what
think
would
we're
the
overdue
catalyst?
for it.
What would the catalyst be for tech to shake out? I mean, other than the obvious bubble that it's in. I mean,
Well,
what?
something that we've talked about on this show before, or actually, I don't think you were on the show on the episode where I was talking about this.
Huh,
Um, it has to do with that ARK is actually liquidating they're rotating out of their more liquid holdings
mhm,
and into smaller cap stocks that are less liquid. And the problem is if they get redemptions or outflows,
uh-huh,
they have to sell stock in order to meet those outflows.
right.
And if they're crammed into the least liquid stuff that they've been in throughout
Uh-huh,
this entire rally off the March low,
right.
at a time where there's the most money in the fund,
Right.
like that's really what could cause a tech panic. And
Oh.
so when Kathy says there will be fear, I mean we're not there yet. And I mean it I mean just look at the VXX.
Okay,
It's
hold on.
barely even moved. It had a jump when GameStop went up a bunch the other day, but I mean, if I look at the VIX index itself, I mean,
Yeah.
this is it's on the floor. It's at the bottom of its range.
The VIX index? Dude, that's about to explode.
It
You don't
looks
see
like
what I
it's going to
see,
go higher.
apparently.
Yeah,
Yeah, I bought UVXY about a week ago, or maybe about 4 days, 3, 4 days, Monday. And
okay, I'm
I'm
bringing
sorry,
up the chart
Friday.
for
I
that.
bought I bought the UVXY Monday. So I'm sorry, Friday. I bought more today. So I was mistaken. I thought there was going to be a breakout Monday, and instead the market had other plans. It had a rip your face off rally in
Yeah,
mind.
Oh, you're not going to believe what I did on Monday morning when I saw the market go up like it did.
Uh-huh.
Right around a little before lunchtime, or maybe right around lunchtime. What I
Right.
ended up doing was I got some iron condors on ARK, which sounds
Oh,
weird when I'm talking about predicting like an ARK driven tech panic.
right.
But the reason I did it is it was up so much, and I already bought. I had already by that time, like I near the open, I got into some deep out of the money ARK puts, and so
Huh.
I already had that position on. So like if ARK had some kind of a liquidity situation that
Right.
caused the panic, I war gamed it out. I think this was on a show you weren't on.
Uh-huh.
And what I used as kind of the baseline model for what could happen with ARK is, interestingly, we were just talking about volatility, is the XIV. So XIV, it set up a real nasty chart pattern, and it looked like volatility was going to explode higher. And then what happened is as soon as the market closed, XIV started plunging. I mean,
Oh,
really moving.
yeah, I see it. I'm looking at it now.
Which thing? In
XIV.
XIV?
Yeah, I think I am.
Well, oh no, it's
XIV.
gone, man. I'm talking about the termination event for XIV back in 2018.
Oh, okay. Well, I don't know what I'm looking at then. I'm looking at a chart here.
Is it ARK? I see
No,
ARK on
X
your screen.
credit Credit Suisse cash manager. Oh, okay. No, that's the
Yeah, so
liquidation I see.
XIV, here's what XIV was.
I'm sorry, that's a liquidation that I see.
So
Okay.
XIV was an inverse volatility ETF. So it moved pretty much one for one inverse to VXX.
Wait a minute, I thought that was a TVIX that
So
had the
you're right. So TVIX also is no longer around. I think maybe it's pink sheet traded, but it's not on the exchange. I think it might actually be all the way gone now.
hmm
But before that, in February, I think it was February 6th, 2018,
Uh-huh.
there was, they call it Volmageddon. And let me actually bring up an article about this.
Yeah.
Like if you just do a search, I'm on DuckDuckGo,
Yeah, I use DuckDuckGo
Volmageddon
too.
2018. Let's see here. There's a Bloomberg article. There's a NASDAQ article.
Kramer was all over it.
Yeah.
To his credit. I don't give that man a lot of credit, but
I'm going to click into the six-figure investing article. Does it have a chart? Let me see here. What I want to find is a chart. I mean, that looks like a really great article, but I'm not seeing the chart for XIV on it. What about this? ETF trends, Volmageddon. When I find one I like, I'm going to put it up on the screen. Nope, I don't like that one either.
do this.
Or Volmageddon or the Volpocalypse.
Uh-huh.
I know somebody's going to have the chart for this. So anyway, I mean, I was so for anyone shorting volatility back then, if you look at the problem with shorting VXX, is that you have to keep on rebalancing the position. So let me put VXX up for just a second, or actually let's talk about UVXY because it's the same thing. So if you're trying to take a position short volatility and you want to do it with ETFs, then you can short these things like VXX or UVXY. Here's the problem with it is when it goes down, in order to maintain a similar exposure, you have to keep on shorting more and more and more,
Right.
unless it spikes, and then you have to like, if you're trying to maintain like a percentage allocation of your portfolio to short volatility, you're essentially rebalancing it all the time, and that has costs and it takes time. But what you could instead do is let an institution do it for you and buy the ETF that does all that rebalancing every day for you, and that was XIV. So it made it a lot easier to maintain a short volatility position. It was the inverse of VXX. Well, what happened is it actually it closed at I think $106 a share, and volatility was so low at that time. Well, I'm talking about like single digit VIX readings, okay?
Uh-huh.
And it had been dropping for like most of the year in 2017. So, it's. Let me see if we can get a VXX chart. Actually, I don't. There is a way to do this. I know we can get a chart. Hang on. It's not VXX. That one doesn't have data all the way back to then. But there is another VIX ETF that does have data all the way back to then.
I don't know.
Yeah, hang on. I'll think of it.
Okay.
I mean, UVXY might. Let me try and bring that up. So if we flip this to a weekly, do we see that far back? Almost. There it is. Okay, so Chris, I don't know if you have a way to look at UVXY or not.
Yeah, I have it up on the chart.
Can you see it all the way back to 2018?
Hold on, let me check.
So UVXY, it had this huge run up, and what you're not seeing is what happened outside real time market hours.
Yeah.
Okay. It doesn't even appear on the UVXY chart.
So I could do it on the daily probably. Let me pull up the daily.
And so anyway, long story short, what happened here is the market closed, and when the market closed, that's when somebody started buying the crap out of volatility, like big time. It was like the market panicked into volatility, and XIV went into absolute free fall. I think within like an hour of the close, it had fallen from 106 all the way down to, and don't quote me on these numbers because I'm just going from memory of like what happened years ago. It went all the way from like 106 down to within an hour down to about 40. And within another hour, it was down under 30. Okay. So I actually bought some at 35 and I ended up selling it at like 20 within 30 minutes later. I mean, it just kept on plunging.
Wow.
It plunged so far that it hit the termination clause event.
Huh.
And this happened all within the, it went from like 106 all the way down to like $17 or something by the time the after hours session was over at like 8 o'clock at night. And so, by the way, had I instead shorted VXX instead of buying XIV, that trade would have recovered. It would have bounced back, and I would have made the profits I was expecting. But because the product I was in essentially disconnected, it broke. It hit its termination event. It never recovered. And so, these kinds of things are possible. I tried to war game it out a little bit, just thinking like, okay, well, because ARK is an ETF, and there's an interesting phenomenon that I think is kind of happening in a small way. And here's what it is. I think Kathy is kind of losing some of the benefits of diversification because of, I'll illustrate this with a simple example. If you only hold two stocks and you have half your money in each one, you have stock A and stock B. If stock B goes bust, then you still have half your money, right?
Right.
But what happens if you're systematically selling off stock A to buy stock B, and stock B doesn't bust right away? It just slowly goes down, and it busts over a period of, say, a month. Well, if it just keeps going down 10%, 20% a day, and you keep on selling off A so that you have half your money in A and half your money in B, well, guess what happens? you have very little money left in your hand in stock A when B finally goes bust. Like if it keeps going down and never comes back. And the point is, with a portfolio, like one stock going down and staying down, if you're rebalancing in this way, it'll do that same thing to your entire portfolio. So it'll essentially like siphon all your money off if you're actively rebalancing like that. And ARK is an actively managed fund. And so people have been calling this out. Like I'm going to show a tweet today from this guy, Edwin Dorsey. New ARK Invest trades today. Still buying small caps like Surf and ASIC. And people have pointed out that she's selling off Facebook to do it. So I say she. I mean, it's a whole fund, right? But so ARK is selling off their more liquid stuff, and they're using the sales proceeds to buy more of the illiquid stuff because it's down a lot. I mean, presumably because it's down.
It just sounds like she's getting out of all these overpriced tech, tech giants. Which isn't a bad idea, but I wouldn't invest it in something small.
She's not taking it into cash. She's going into less liquid things.
That's what I was saying.
Yeah,
she should
be
going
the problem
cash.
Is if there's outflows, then she'll be forced to sell. Because she's got to sell down the assets to match the NAV, right?
Right.
But you see the feedback loop here.
Yeah.
Yeah, it's like the more that ARK sells of the less liquid stuff, the more it's going to force those names lower, which causes more outflows. And that's the doom loop.
Right.
And so, I mean, this could cause a tech panic.
So it's like a self-fulfilling prophecy because she thinks that, they're too overvalued, which she ain't wrong.
Yeah, but, she's not going into bonds or anything. She's not, I don't know that she's maintaining a cash war chest. Right. So instead what she has a war chest of these mega cap super liquid tech names. Well, she's already drawing that war chest down and really the selling hasn't even started yet. As we've seen from, we were looking at the VIX numbers, right?
Right.
And so there's not blood in the streets, there's not panic. But that space is getting frothy. Well, what happens when there is panic? If we see that doom loop, Chris, I mean, I think we could see potentially a situation where ARK is down double digits, gaps down.
Right.
And so what I'm trying to do is keep some deep out of the money puts on ARK.
Right.
And just, chipping away a little bit here and there. And the way that I'm funding it actually is with iron condors in ARK.
And where does ARK? How far forward does ARK go? Let me take a look at this myself now. That is on my 2. Okay, so it goes out.
I think your video's caught up.
Oh, I'm not. Yeah, I just have it on the UVXY. I'm using my other screens.
Okay.
Excuse me. So, I would like to buy puts in ARK into you see September. I need to go past September, but after that is January.
Well, why are you trying to buy that far out? Like I'm just week to week. I'm buying the weeklies as they expire.
Oh, never mind. They're stupidly expensive.
Yeah, exactly.
Because I don't know if Joe isn't going to say, you know what, here's another $2,000. And you know what, we'll just extend the houses a little bit more. And the Fed stays accommodative.
Yeah, he could. So
that's the only real thing that can save this market from, the GFC.
Yeah, but I don't know how much that's going to help tech at this point. So, Chris, if you want to look on your side, I popped up the options trader at Interactive Brokers, and I want to just talk through what I'm doing. So, in this scenario, what I'm really describing is a 1987 kind of a crash, okay, where things open like imminent, horribly down, okay, right. and then the market just completely implodes. I'm talking about 20% down in a day. Like imagine if the S&P 500 was down 10% in a day,
right?
And it's because of a firestorm happening in ARK. You could see ARK down 30%. And
Right.
so what I'm doing is I'm just buying these in little bits.
Mm-hmm.
Is I'm looking at things like I'm drawing a combo here. Okay, I'm in the combo builder, and I'm just buying out of the money puts like 125, 120,
What are you
115,
in?
and
Arc?
110. Like that's a
Are you in?
combo. All
Are you in
four of them.
Arc? Are you in Arc?
Yeah, in ARK and March 5th
March
expiration.
5th. Okay, so let me open this up to about 30 strikes.
And so to put on one of these combos costs $200. The price is $2 right now. Okay.
Uh-huh.
And this expires in 3 days. I mean, ARK is probably not gonna. The market's very unlikely to have that panic this soon. But the point is, it's illustrative, okay, of what I'm doing. And so, if you look at say a 60% down move in ARK,
Uh-huh.
if that happens,
Uh-huh.
this position purchased for per combo $228
Wait, I haven't opened it up enough. I have to go to all.
it would have a profit of $25,000.
Okay, so what strike are you looking at?
So I'm looking at just whatever's cheap, and I'm buying essentially like a rainbow of them. So in this case, I built a combo with a 125, a 120, a 115, and a 110.
Oh, that ain't cheap to me, but okay. I see it.
Yeah,
So you're
and I mean this is so well. Here's why
what
it's
are the
not cheap.
deltas on
Is
those?
I'm funding this with Iron Condors, and so we'll
Oh,
talk
that's
about
right.
that
That's right.
next.
That's right. That's right. That's right. I
Yeah.
forgot. I'm just thinking about
So the
paying
idea
outright for
here
that.
is, ARK is going to move normally,
Uh-huh.
but if it crashes, it could crash really big. So that's the
Right.
idea, right? Like I'll get blown out of the Iron Condors if this happens,
Hmm.
but it doesn't really matter that much. So if even if ARK's down 20%, a
Right.
move like this, this has just tremendous juice. And I mean, I think such things are possible. When ARK is close to the 52-week highs, I'm not putting on trades like this. I'm putting trades on like this when ARK is not near 52-week highs. The market crash in October of October 19th, 1987, that crash did not happen when the S&P 500 was near the highs. It crashed when the market had sagged off the highs, and it started margin calling people.
Okay.
When it was down enough that people were starting to get margin calls, like that's when it became vulnerable to a crash.
Gotcha.
So one of the premises that I learned from modeling, like playing with financial models and playing with the data, is that markets very rarely crash from the highs. That's
Okay.
super useful information. And so
It
with
is.
ARK down, kind of like it is right now, and the NASDAQ down off the highs, we're
Right.
starting to get into a situation where you can get a panic.
Right.
And so now let's talk about the Iron Condors real quick. And so I got these, I don't think it's a good idea to just put these on all the time.
Uh-huh.
But if you could get the right mix of liquidity and a jump, a pop in implied volatility, like I put this on when on Monday, ARK was up 6%. And I thought, you know what? Like, these options are now like getting out of control. So I put on for expiring this Friday. I'll show you the combo that I got. It was let's see here. I sold a 128 put, bought a 124 put, and I sold a 140 call and bought a 144 call, I think. Pretty sure that's what I got.
Okay. Did you say you sold a 124 and bought a one?
No,
What?
I sold a 128 and bought a 124.
huh. Hmm. And that's the puts, right?
Yeah, on the puts.
Okay.
And
So
then
that gives you,
simultaneously, I sold the 140 call and bought the 144 call.
well, the put side gives you a 40 cent credit. And what'd you do on the
On the
call
call
side?
side, I sold the 140 and bought the 144.
Sold the 140 and bought the 144.
Yeah.
And that's a 60 cent credit. Okay.
Yeah, and so I'm
Or
kind of going from memory. No, it's
a 40 cent credit.
yeah. So here's the idea: is if it closes in the range, like when I put this on, I was getting almost a $1 of premium for every $2 risked,
Okay.
which that's pretty good for just to trying to make it to Friday and having a
Yeah.
range this wide.
Yeah, absolutely.
So if we get another like explosive up day, I may just put this on again, depending on
Uh-huh.
what the situation is. Where the current price is, I may look out to next week, and if a similar opportunity comes up, I may put that on too. So, and so if ARK keeps going down, I think Tesla will probably be the driver for it. And so I also have a bear put spread in Tesla. So I'm kind of covered a few different ways here. Like if ARK just trades normally through the end of the week, then I should pick up way more money on this Iron Condor than what I paid for the Tesla bear put spread.
Oh, look at that chart.
Which one are you looking at?
I just pulled up Tesla.
Okay, and so this is really a three-legged trade. So there's the Iron Condors on ARK, and
Uh-huh.
then those credits are used to buy deep out of the money deep out of the money puts on ARK, and then also bear put spreads on Tesla. So if ARK's only down a little bit, but enough to like blow out the bottom of my Iron Condor, it'll be
Right.
Tesla doing it probably. And so I should make a ton of money on the bear put spread on Tesla.
Right.
And so we haven't talked through that trade yet, but why don't you give us your thoughts on Tesla before we move on, so
Okay.
people can see the chart that you're showing.
Let me look at this on different time frames.
I
Because
mean,
it
it
just,
looks like we're getting to the point where it's like a lot of people bought the dip, and then the floor caved in,
I'm
and it
looking at
looks to me like we're setting up for the second rug pull.
yeah, that's what I was just going to say. Yeah, it looks like it's going to double bottom at the least. I
Yeah.
am
So the put
trying to
spread I
zoom
have
in.
on Tesla expiring this Friday is I got I got it today. I got a 650 600 bear put spread.
Okay, I'm just right now. I'm trying to chart it.
Okay.
I,
Yeah.
I can't
The
even.
screen's a little behind, so get it set up. I'm going to talk through that bear put spread
All right.
while you get the chart set up that you want to talk through. The screen is catching up, but let me talk through that bear put spread real quick while you put that together.
All right. All right. Yeah, I'm just cycling through time frames. That's all.
Cool. All right, so I'm going into strategy builder on Tesla. Let's see here. Let's go to the right calendar here. So the 650 600 bear put spread. I got into this for under $3 a combo, and as it is right now, with a midpoint of around $4.40 a combo, the return to risk is over 10 still.
Mm-hmm.
And so, with 3 days to go till expiration, that's a really good return to. I like that. And again, for me, this is funded by the Iron Condors on ARK. And so one of the reasons that works is because ARK had a big holding that was up 4.5% today. It was Square. And so
Square.
Square is holding ARK up. So like I can end up making money like from all these. Hang on a second. Okay, YouTube not receiving enough video to maintain smooth streaming. All right.
Should be getting video for me.
Yeah, it's lagging here on my upload. Let me see if I can crank up the bit rate.
I wonder.
Let's see what this does.
I wonder.
I cranked up the bit rate. Hopefully the audio comes through okay for people. It's probably an internet glitch on my end.
I'm trying to take into account split, just so you know. That's why I'm going through all these charts. Okay, so that was inverted head and shoulders, and then it ran up, but it didn't run up that much. It barely made it to a new high, and then it was flat, and then it popped up there. And the anticipation of the split, there's the split, and then we cycled horizontally until it made a flag, massive flag. Oh, I remember that flag. And then it took off like a freaking rocket, like one of those BFRs he's got. Okay.
Well, I cranked up the throughput. I'm not sure what's going wrong here with the video, but hopefully our audio is still good.
Yeah, I hear you fine. Okay. I think I have a thesis on this. I think.
Okay.
Let me look at the weekly real quick.
Yeah, so give those charts a minute to set.
Right.
And catch up on my end.
Okay. Yep. I'm good.
Okay, and what I may do with this bear put spread too is I may roll it down if Tesla goes down a bunch tomorrow. I don't know yet, but all right, go ahead.
All right, so in the top left corner, we have.
Okay, we're back to excellent, by the way, on the stream quality. Okay, so top left corner.
Yeah, you see the 900 high.
Yeah.
Okay, so right below that 900 high, you see that wick?
Yep.
That is a very, very bearish wick.
Yeah.
I mean, it is a massive 200, almost 200 point. It's a 175 point wick. And this is my oscillator. So I created this using Fibonacci numbers and picking out these lines of data, and I built it to just make it simple because I can't. I'm so focused on what I'm trying to say. So once this green line breaks below that overbought condition.
Oh yeah, I see what you're talking about.
And this has not oversold yet, right? Now over here in the top right, we have the same wick, and we just are coming out of a squeeze. Great. So let's go to that thing's moving like pond water. All right, so let's go over here. This is the 4 hour chart. So what is the 4 hour chart telling me? I just enlarged it. The 4 hour chart is telling me that this bear wedge is a great possibility for a short. Because if you look here at the DMI, while the ADX is dropping, they kissed and they did not make up. So we are going to see more downside in the 4 hour chart as well. But
yeah, see, so I'm looking at the same thing. You know, when I see that, like, you know, those lines you drew on there, like, to me, I mean, that just jumps out at me like it's a continuation pattern.
But and this is a big but, on the daily chart. Wait, I'm sorry. No. Yeah. Okay. On the daily chart, we are in a very oversold condition.
Yeah.
So I am concerned that this is going to have a false breakout to the upside, and then roll over. What supports that is this hourly chart. You see, you got this room to run right here.
Yeah.
That's 31 points. And if it wicks, you're looking at maybe 38 points or 40 points.
Yeah.
That would be indicative of a false breakout.
So if it does that by Friday, it may be the bottom end of that range you're drawing. That could be a good place to leg into a bull call spread, with the Friday expiration, so that I'll have legged in near the middle of that range onto the bear put spread, and then at the bottom of the range leg into the bull call spread. So then I'm covered if it breaks big either way.
Right. Yeah, that's an option. Or you could just wait it out. I mean, however you want to do it. If you want to be aggressive, yeah, what you're saying is awesome. And aggressive plays like that make money.
Yeah.
So
well, I have a pretty negative outlook on the overall market right now.
you and I both.
Yeah.
Well, actually, half of Twitter.
Yeah, it's you're right, and it's a lot of the people that are pretty good at the macro analysis. I think are some of the more negative, the people with the negative outlook right now.
Right.
I mean, I don't know that a whole lot of new traders are doing the shorting much, or even buying puts. I mean, I don't think that's their game.
You see, in regard to my oscillator, right, that I was just showing you on the weekly, in this top right chart, are you looking at that right now?
Yeah.
Okay, you see that green line?
Yeah.
It hasn't broken above yet.
Right.
So that tells me that the chances of this really ripping higher and filling that gap, forgetting the wick, but filling this gap right here at the 782, that's not going to happen. Excuse me.
Yeah.
I don't believe that it's going to get up here unless that green line pops up. And I just love this oscillator because it works so well. But yeah, that's where I'm at. I personally don't like trading Tesla because every single time I've done it, but once, one time I made $7,000 on a day, like an overnight trade. But other than that, I lost all that and more. I hate this. I hate this company.
It's kind of tricky. It's got its own personality.
Yeah, it does. So I've always been on the wrong side of this damn thing. If you're looking at the 4-hour chart, also, we got to break that line. Down bottom left.
Yeah.
Break that. Goodbye. Down to 400. And that market's got to go with it.
Well, and so from a flows perspective, a lot of money has flowed into Tesla in that 800 to 900 range, and they're underwater now. And if there's outflows at this lower level, well, I've seen a lot of money buy high and then sell low on Tesla. And the other thing is, with that Bitcoin purchase, so I mentioned this on the weekend show that I did.
Okay.
Is that the earnings per share of Tesla?
It's like 1,000.
Their earnings is actually smaller than the amount of Bitcoin that they bought.
Huh.
Yeah, and I think it's 12 trailing months of earnings is smaller than the amount of Bitcoin they bought. And so if Bitcoin goes down sharply, you could see Tesla, they will have essentially surrendered all of their earnings to a Bitcoin drop.
Bearish Bitcoin. Oops, I put a point there instead of a BTC. Okay.
I mean, Bitcoin to me, it just feels exhausted.
I see the MFI turned up on the daily, but I'm not feeling it with this thing. I think it's going to go down and
I think we've pretty much seen like whoever was going to go into Bitcoin on this up cycle, they're probably just about already in.
Right. Sorry, I had some thing on
Like
my.
here's how ridiculous this Bitcoin stuff is getting. By the way, I'm gonna put a chart up of it's NTCH, I think.
Okay, Bitcoin looks like it's created an island top in the daily. Just so you know.
NTCH. Is this it? Nope, that is not it. All right, well, let me just reproduce the screener. So what I did is it was a really simple screener. I said shortable, and I'll do optional and shortable. And country is China. Okay. And you can see how ridiculous this Bitcoin thing is right now. Then what I did is I went to sort, and I sorted by performance, and I did performance this quarter. Yeah, there it is, NCTY. That's it. So I found this stock NCTY, and I looked into it on Yahoo Finance. The first thing I did is went over to the profile, and I saw that, okay, wait, the 9 Limited, it's headquartered in Shanghai, full-time employees 61. There's your first red flag.
Right.
And I mean, yeah, they could have a bunch of contractors, and those people aren't going to show up as employees. Also, they may have done some acquisitions, and in fact, we'll come to that in a minute. But this company's been around a while, and here's what they do. They are the 9 Limited, together with its subsidiaries, operates and develops online games in the People's Republic of China. The company offers online games, including multiplayer online games, mobile games, web games, and TV games. It also develops mobile games, including Crossfire, New Mobile Game, and Audition. I don't know what these things are. The company was formerly known as GameNow.net Limited and changed its name to The 9 Limited in February 2004. The 9 Limited was founded in 1999 and headquartered in Shanghai. So this company was founded in 1999 and has 61 employees. But check this out. Their market cap is 461 million.
Wow.
Yeah. So, I mean, if you want to look for shorts, you're typically looking for companies where, like, the accounting isn't what people thought, or the stock isn't what people thought. And a great place to look for those kind of things is Chinese companies. So the reason I say that is you probably remember Luckin Coffee, right?
Yeah, I was actually bullish looking.
Yeah, you know, who doesn't want to get in on the Starbucks of China, right? Like that was the tagline for it.
Yeah.
And you know, get in on the ground floor, right? Because you know we all saw what happened with Starbucks and we missed that, but there's a new opportunity. So
yeah, I'm so glad I didn't.
Yeah, it's now on the pink sheets. It's still there, but it trades at like a tiny fraction of what it was there for a while, and it had a huge breakout, huge run up. You know, it looked like, I mean, it was in the news. It looked like the real deal, and then overnight it was all over, man. It was halted and all kinds of stuff.
Yeah, I remember Jim Cramer was bullish on it, and that's what made me nervous.
And that happens a lot with Chinese companies where they're just like not what you think. And so when I see 61 employees, it makes me think that, like, okay, well, what is driving this thing higher? So I went and I looked at the news, and here's what it is.
Okay.
The 9 signed legally binding memorandum of understanding on the acquisition of a cryptocurrency cloud mining blockchain software as a service company. So they put every little catchphrase in there that they could, okay?
That is a mouthful.
Yeah. So they're in there buying blockchain companies.
Right.
And so here's what people may be thinking, like, oh, well, what if they can use people's mobile phones and mine the cryptocurrencies while people are playing the games, or maybe while the games are off? But the thing is, I think it's so expensive to mine a cryptocurrency now that, like, just passively mining on people's phones probably isn't going to help you at all. Like, I mean, I don't think there's anything there. So,
Yeah.
you
I
know,
remember when they were attaching it to apps
yeah, I mean, I think that has
for
run its
your
course.
for your computer. I'm talking about, not
Yeah, I
your
mean,
phone.
you can't even hardly get much juice out of a high end video card anymore. So people's mobile phones,
Right.
I mean, I think that ship has sailed a long time ago.
What are those mining rigs going for now? Like 20, $30,000 each?
For a mining rig? Oh, yeah,
Yeah.
I'm sure. Um,
Yeah. I think I was looking at cards because I'm teaching my son how to build a computer, and or I'm going to teach my son how to build a computer. He's 6, and I was looking at video cards, and when I did that on eBay, these mining rigs came up, and I was like, "Get the fuck out of here!"
oh,
Yeah,
yeah. I mean, the price point on those things,
yeah,
yeah, it's crazy. So here's where I'm going with this is, I've been waiting for the right signs of exuberance on Bitcoin, and like this is it, man. I mean, this stock was at in the end of 2020, this stock was trading in a range of $2.63 to $4.28. That was the range.
uh
Had a
huh,
huge breakout, ripped up to 20, just under $28, fell
right,
back to $8, and then it ran from $8.32 in January
uh
all
huh.
the way up to $89, Chris, in February. So a month later, it's almost 10x from that
I
bounce.
I have no earthly idea how the hell I missed. Nobody talked about it. I didn't hear anybody talking about it.
Yeah, me either. It's I didn't even see it on most actives lists or anything. So
This
all
thing's
the
on the
volume, by
Nasdaq.
the way, was in the very beginning of the year.
Uh huh.
Huge volume. So
Yeah, I
the
see that.
point is like there's so much capital going into this kind of stuff right now. Like this is the exuberance. Like this is it. It's here.
Uh huh.
We're at the point where all a company has to do that's like, really it should be a nothing company, 63 employees. All they have to do is just say, "Oh, well, we're going into the cryptocurrency business." That's our business.
Right.
And, the stock can be worth what, 20 times as much almost, inside of a month or two. I mean it's ridiculous. So that's where we're at right now.
Right.
Now, I'm
Yeah.
not suggesting people short this, by the way. So, I mean, it could go from 44 to 400 in the next 2 months.
Right.
So, I'm not suggesting you short it, but
It
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 may
it
be that there's opportunities to buy puts on this.
it looks like the last rip up and then pull back. It looks exactly the same.
Yeah. Yeah, it may not be done yet, but if I want exposure to Bitcoin, I'll tell you where I'm going. I'm going to Riot blockchain. Like
Riot.
it still looks good. It's in a pullback right now, but it still looks pretty good. So, maybe the play here is like short Tesla, long Riot.
Riot.
And like if you're right about Bitcoin, you might lose on the Tesla short, but you're making money on Riot. And again, I'm not shorting Tesla by selling the shares, or
Right.
borrowing and selling the shares. I'm shorting Tesla by buying very short dated put spreads
On Riot.
on Tesla.
Oh,
I'm not
okay.
shorting Riot.
Okay.
I was long Riot from 18.
Really?
Yeah, and when it had that big drop after like being down for 2 or 3 days, and then it had
Uh
that big
huh.
drop, I
Yep.
got out and locked in the gain. Like that was it. I had already sold half on the way up,
Uh huh.
and then I locked it in on that big drop, but it just fell back to the 21-day moving average, and it's just been bouncing around ever since. And I don't really like it in this range. If you notice, like that range looks really choppy to me. It doesn't look like it did, for the entire rest of the rise. Like in order for me to
Okay.
get back into Riot, here's what I would like to see. I want to see some real tight closes, and maybe on a 30-minute chart, I want to see a great looking cup and handle or something like that.
I don't know why your Riot looks different than mine.
Um,
Maybe you zoomed in more.
well, I'm on a 30-minute now.
Oh, okay. Up at top it says daily. That's why I was.
Yeah, I was on the daily. So yeah, I want to see some real tight closes, or I want to see like a cup and handle on the 30-minute chart. I mean, a lot of the cup and handles and like the old school technical analysis, those
There
things
we
are
go.
still happening. It's still good, but it's like you have to like zoom into the shorter time frames now to really be seeing that stuff. So here's an example. Like we do see a real nice cup and handle pattern on the 30-minute chart
Yeah, I'm looking at it.
in the beginning of February on Riot, like just as it was breaking out. So I mean, you do still see these chart patterns. There was another one on Tesla before it ran up in the end of December and January. There was a great cup and handle chart on the 30-minute there. So
In what? In
what's
what?
that? In Tesla.
Oh, okay.
Yeah, but I mean, I'm not going to scroll back there and look at it. But the point is, like, a lot of those charts that people used to look at on daily charts are now happening on the 30-minute time frame or even shorter,
Yeah, I'm
even on
looking
the
at the 30
10-minute time
minute.
frame. And here's what's doing it is computers. It's because computers are doing it. People looking
Mhm.
at daily charts, they're missing most of the signal.
Right. I agree.
So, yeah, I'm a stockcharts.com subscriber. I really like their charts, and I
Uh-huh.
like to be able to zoom into that very short time frame. And I mean, your
Nice.
broker already has that data, but I mean, for me, I get a lot of information off of these charts. Like, it's sort of like how you've got your custom indicators on there, and you know what you're looking at. You're comfortable with it. You can just read so much information from it, and
Right.
if I look at it, I'm not going to see the same thing. And even you explaining it to me, I'm only gonna know what you've told me. And probably a lot of it is it's sort of like if you're trying to describe someone's face to me, and then I got to pick them out of a crowd.
Right. I
Like
hear
that's
you.
what chart reading is like. It's like looking at faces. I mean, at least that's how it is for me.
When I created this oscillator, I was not doing good 2 years ago. I was having panic attacks really, really bad that I wasn't sure that I was going to make it. So this was born out of necessity. When I created this oscillator, I made it so that any person could trade, even if you never had experience trading the stock market before. If you followed the signals that I gave you for this oscillator, you would make money.
Well,
And
what I'd suggest is if you screenshot some of this stuff and then write it up in like blog articles,
uh-huh,
then you're giving people a way to like digest it and take their time with it, and just keep revisiting it on different charts. And this is probably a good time to talk about your new trading room that is getting started, because that's another place where people can learn to read these signals from you, and some of the intraday stuff that you're doing,
right,
because we do trading homework outside of market hours. Like that's
right,
that's why it's the homework, right? Like
right.
this is the extra work that is so important. At least it
Oh,
has been for
absolutely.
me.
Yeah. Yeah, you're setting up for the next day. You're looking at what it's doing.
Yeah,
Yeah.
in fact, like a lot of people who are successful traders, they'll tell you like, I'm not really doing anything but just like carrying out my plan during the trading day. Like, battles are won before they're fought, right? Gordon Gekko,
Right.
Wall Street.
Yep.
And so it's coming into the day ready for anything that is, that's like a key ingredient for a lot of people. Not everyone
Hmm.
needs to do that, or not everyone benefits from doing that, but I mean, for me, it's helpful.
Yeah,
So yeah,
absolutely.
do you want to talk about your new trading room a little bit, Chris?
Yeah, sure.
And you can, um, I could try and get a link up in the description of the video.
My link is it's in my intro on my Twitter. It's
Okay,
the
so
bottom.
people can go and find your Twitter account, and I
Right.
have that link showing on the screen right now. So they can go find your Twitter, look in your profile, and the link right there. Like it may not be clear to people what that link is. You may want to like put a description on it of what it's going to take them to.
Okay.
And then yeah, if you tweet out before you broadcast, that'll give us a chance to get in.
It's every Monday. I mean, it's every day that the market's open, Monday through Friday. But
Okay,
yeah, I
yeah.
could do that. So what I do is a few minutes before the market opens, I'll jump on and I'll run through a little bit, not very much. It depends. It kind of depends what the future does. If the futures are really moving, I'll get on a half an hour before and walk through it. But if they're not, I don't see any sense. What I've been doing lately is managing trades. I did one today, and I was calling out trades that people should have took. So I didn't even look at this one. I did a trade, like a not even a paper trade. I just wrote it down on paper. So it was a 387 strike. It was a put on the SPY, and I said buy it now. And
All
I
right,
said
hang on a second. I'm gonna bring that up on. I've got IB open so that I can look at some of these kinds of things. So,
all right,
um,
it was trading at $3.08.
okay, so Spy. What was the strike? Expiring this Friday or no? Expiring
I
tomorrow.
think I think it was this Friday. It might have been tomorrow, but the price point was $3.08, and it was a 387 strike. I'll go ahead and
Okay,
pull
it
it up
probably was
myself.
Friday then. 387 strike. Yeah, all right. So I'm
SPY.
bringing up the chart for that, the intraday chart. And then what did you say that the price was? Do you remember about what time you called that out?
It was in the morning. Probably around 10:30 ish, I guess.
Okay, so I'm in Eastern, or I'm sorry, I'm in Central Time, so my charts on
Oh,
IB
you're
are a
doing
little
a
bit
time.
skewed.
You're doing like a
So
time thing. Yeah, okay.
okay, yeah, I'm not sure that I'm looking at the right thing.
So it must have been the I don't remember
So
which
if
freaking
it
one
was
it was.
around lunchtime, and it was a 387 put. It probably would have been further out into next week.
Uh, I don't know. Be honest with you, I don't remember.
Yeah, that's all right.
I
Well,
don't.
so
I don't
anyway,
think it was. I don't think it was that
Chris,
far
Chris
out.
is going over those kinds of trades in his room.
Yeah.
So something too that I've been thinking about lately is the overnight with these Monday, Wednesday, Friday spies. A lot of the up move in the market happens during the overnight session.
The point being is that I said get in on the 387. It's now trading at 386.54. So you would have been in the money because I'm pretty sure it was an at the money that I called out.
Yeah, got you.
Um, so that is an example. All I did today was manage trades. I have a lot of trades out there right now for a market pullback, a severe market pullback, kind of like a crash trade setup. And
Yeah.
I don't I don't know that we're not getting it this Friday, but I'm farther out. I have some trades in April. I have some trades in March monthly expiration. I have some calls in TLT. I have some
Yep, we're both
puts.
in that. I mean,
Yeah.
you really nailed it on the show. It was last Thursday, I think.
Yes.
So about a week ago, you nailed pretty much the exact bottom on TLT. Like the very
Yeah.
next day, it started ripping higher,
Yeah.
and yeah, I got into that one. I think so. Mine's a back spread. It's structured a little differently than your TLT position, but I've got the
Yeah. I'm
April
just
monthly expiration.
I'm just a call. So oh, you got the April monthly too?
Yeah, yeah.
Nice.
Here, I'll draw the position that I have.
All right, cool. While you're doing that, so yeah, I got some UVXY that I'm long in. I am short the XLE, and I'm really glad that I did that because I heard that OPEC Plus and Saudi just came out and they said that they were going to add production. So that was really nice to see on Bloomberg. I'm not quite sure why the XLE is going up in the overnight, but hey, what are you going to do? A fool and their money is soon parted. Um, And let me see, what else do I have? I gotta move you away. You're covering my positions.
Oh yeah, sorry.
That's all right. No
So
worries.
when I'm
Uh, I'm short UNG and I am short spiders until Friday. Except I am not in the same strike that I called today because that was supposed to be a 1 day trade. I'm in the 368 put. So, um, and I'm getting hit hard. I'm not profitable on that at all. So that's probably just going to expire worthless. Uh,
yeah, it
I was
happens.
I yeah, I was early. It happens. So, um, the other thing that I do on during the day is I have this thing. It's called Use the News, and I look at the ETF movers. It has extended hours movers. It has pre-market movers. It has stock price up, stock movers, stock price down, and you can look at it by the bid and ask to see how much you want to, what kind of market cap you're looking for, or you could look at it by net change, or you could do it by percentage change. And while you're going through that, I just look for names that I know, and I'll pull up those charts, and I use my S&R knowledge. I use my Fibonacci, and I walk through the trade setup to see if it's worth anything. The first thing I do is I eyeball a trade. It's got to look like it's going to do something. And if you've been trading for a while, you could look at a chart and say, you know what, yeah, that's going to move. So, or that requires a little bit more investigation. And
Yeah.
that's when you start throwing your fibs on it, or whatever market analysis you choose to use. Um, and that's what I do. And when I see something going on that's quick, fast, and in a hurry, and it needs to be, like there's an opportunity to make money right away, I'll just call out a trade and I'll say, take this now. Um,
Yeah, too bad we missed the RKT one. I mean that's been on my radar, but it
I didn't
really
even
for
see
being
it.
at the bottom of a range, like it was making a nice range, and it IPO'd recently, and it just hadn't really gone anywhere yet. It just looked like it could run,
Right.
but yeah, I missed it.
So that's the TLT that I'm looking at up here, the P&L thing.
Oh yeah, yeah.
All right. So can you? I don't know. I don't understand that stuff. I've never have.
Okay, yeah. Let's talk through it if you're okay with that.
Yeah, go right ahead,
Nope,
man.
that's not what I want.
You know what? I got to take a quick bathroom break. I will be right back.
Okay, yeah,
Okay.
go ahead.
All right.
So while Chris is taking a break, I'm gonna look at let's look at RKT a little bit. Yeah, I mean, what a great looking setup. And so this is what I'm talking about, like on the short term, like this cup and handle looking shape right here. It's probably really clear on like a 5-minute chart. Yeah, I mean, just a really great looking base, and it broke out from there at around 24 and a half. Yep, sad I missed that one, because what came next was epic. So it does look like it's rolling over now. It's certainly run out of gas. So I wonder, does it have weeklies? And if so, what a
Okay,
bear
I'm back.
put spread might look like on there.
Oh, all right, I'm back.
All right. So after we look at the TLT thing, I want to look at bear put spreads on RKT.
Okay.
All right. So let's talk through this one. It'll take you a minute probably for the video to catch up to our audio. But here's the idea. I'm essentially creating a credit situation by selling the 135 call, which was already in the money, and then buying an at the money call at 141, and then using those credits to buy 3 of the 147 calls, which are pretty far out of the money. And so the idea here is this takes $600 of margin per combo. So for each one of these you put on, you got to post up $600. So
And
when you're figuring
in,
out ROI, this is how you got to look at it. Is you're freezing up $600 of your capital, and I mean, and you can lose all this too. The way that happens is if you get to expiration and the both the all of the calls that you bought are worthless, and the 135 closes at one the if TLT closes at 141, then the call you're short is worth it hurts you the most. Like, so there's kind of this kill zone here where you really need it to be above 147 by quite a bit at expiration in order for it to be worth anything. So this solid line is the value of the combo at expiration.
I'm in
And so
139.
the reason it's showing you $519 on the right side of that chart when I hover right here at expiration is because that's assuming that I'm going to get an $81 credit from putting this position on.
Okay.
And so the max loss is the margin impact minus any credit or plus any debit. Make sense?
Okay.
And then this dotted line is where it can move today. So it's an estimate without factoring in for changes in implied volatility. So assuming implied volatility is a constant, wherever the price of TLT goes, it's just going to slide along this dotted line today. And so the nice thing about, so this is a ratio back spread. What's nice is like if TLT falls, you know, I'm not really losing any money or not very much. And so if TLT falls down to like say it falls to 133, well, I can essentially recreate a ratio back spread with 133 as sort of the set point instead of 141.
Mm-hmm.
And so if you notice, like where it starts to curve upward, that's at 141, right?
Right.
That's where it really starts to shoot upward. And once it gets above the ratio calls I'm buying, the out of the money calls, you know, 3 of these 147s, that's where it really starts making money. And when if it gets far enough up, it doesn't really have any time decay until expiration, but just so long as a few things, implied volatility stays high, and that it doesn't go back into this kill zone between 141 and 147. And so what I like about this trade or this position is if we do get a really sharp correction in the S&P 500 between now and April, monthly expiration, middle of April, then this position could, it could easily go up over 160, the TLT.
Right.
And it could get to 170. Like that's really my target. And so if it hits 170, then it's the each combo is worth $7,000 at that price, or $6,000, right? And remember, I'm only posting $600 of margin per combo. My max loss is actually slightly less than that, than the 600.
Right.
And so that's 10x the money, and with the added benefit of the only way this trade gets hurt is time decay for time it spends in this kill zone between 141 and or it's really a little further back, between 135 and 147. And so watch what happens if I put time on it in the estimator. If I put a week on it, you can see that like at the current price it starts losing money, and really like anything in that zone. But I mean there's a lot of time left on this trade. Like that's the other thing that's so nice about it, is I'm protected all the way out until April. Now there is early exercise risk, and TLT pays a dividend every month. And so when we get to the end of March, I have to watch carefully to see if the short 135 call gets exercised. If it does, then I basically have to just go back, close out any TLT the next morning and put that back on, that short 135.
Okay.
Or I can run it without the short. I could close out the TLT, or I can keep the TLT and close out the calls. Like if I just want to stay in TLT, like I don't have to sell it if I get, the options exercise, or if they get exercised on me.
Right.
So anyway, that's kind of a walkthrough of this ratio back spread, which is an underused strategy. I tweeted out, or I retweeted today from Hillhick. He was putting out a little bit of details about his. He uses some ratio back spreads on volatility, and I think
Right.
UVXY and maybe VXX. I'm not sure,
Yep.
but and that's a really clever way of doing it, because if volatility drops, then he could essentially reset the trade lower, and it didn't really hurt him much. Maybe just some time decay.
Do you know why Hillhick got into options?
I don't know that backstory. No, do you?
Because I wouldn't shut up about him.
Yeah, well, I
I
mean, it sounds like he's got a pretty good handle on it now. I
he
mean,
well the student has become the teacher when it comes to him. I pointed him in the right direction, and I kept talking about them, and I told him that he really needs to get into them, and he and I built an oscillator together that he uses still. Um, yeah, there's a little bit of a backstory with him and I, and he is a great trend following trader. He
yeah,
is
that was kind of my
exceptional.
start too. Was trend following and the William O'Neill stuff. Like there's this guy Chris Peruna. I still follow him today on Twitter. I stopped following him for a while because the blogging scene kind of faded out. But he was a blogger in like 2004,
Uh-huh.
back when I first started trading, and he was posting these stocks that were doing unbelievable things to me at the time. Like he was a big IBD guy, and he ran sort of like how today we use FinViz and scanners like that.
Right.
Interactive Brokers has some scanners. He would run these screens. You call them his screens, and he had some really fantastic screeners. And he trades a little different style. It's more of a Momo style than he did back then. So now he's trading in bigger cap stocks that are more liquid. But I mean, he was finding these hidden gems, and just week in, week out, he was blogging about it. I mean, almost daily. And it was really eye opening for me. So I learned so much from that guy, Chris Peruna.
Uh-huh.
But anyway,
Nice.
I wanted to show you something. It's this book. I talk about it sometimes on the show, Options as a Strategic Investment by Lawrence G. McMillan. And this book is it's regarded as the Bible for options.
Oh,
And
really?
I have to agree with that. And so this book actually covers things like the ratio back spread and things like that. It's covered in the book. So
Oh, wow,
that's
that's a thick ass book.
oh yeah, it is. It's giant. So
All
I
right.
mean, it's probably like 1,000 pages or something. It's not cheap, but I mean, this $100 towards this book will be better than any $100 combo or option you might buy. I mean,
Yeah,
it's
some furu you wanna follow.
what's that?
Some furu you wanna follow.
Some furu.
Furu, the guys in the Lamborghinis and
Oh
chicks in the islands and all that
yeah, yeah,
on bullshit. That's not trading. For all you new traders out there, that's not trading.
yeah.
That doesn't happen.
Well, I mean, those are marketing guys. That's their thing, is marketing.
All right.
I mean, I'm not a marketer. That should be obvious by this point.
Well, no, what they're doing is they're setting unrealistic expectations of options trading and derivatives trading in general. And then when you come along and, you like, I'm building a website to have webinars and sell oscillators and have, a tiered structure of subscribers for content. These guys come along and they have these unrealistic expectations. And when I say, well, yeah, that's probably not going to happen here, they leave.
Yeah.
or they will leave, I
Well,
should say.
a lot of people don't want to put in the time it takes to get good at this. That's another reason why this is called trading homework. I mean, you can't just like bring a knife to a gunfight. If you show up to the markets and you put your money in there, guess what? I mean, you're already. It's like sitting across the chessboard from a grandmaster, like on day
Right.
one.
Yeah.
So I mean, because those people have the most capital. So guess who's on the other side of most of your trades? Grandmasters.
Right.
So
Right.
I mean, you got to realize that. I mean, it takes a ton of work, and you can't just learn how to do this right now. A lot of people who are just like buying the dip or buying the Bitcoin, the marijuana stocks, the cryptocurrencies, and the electric vehicles. It might feel like it's easy money right now, but the problem is if you make your money in a wrong way, you won't get to keep it, and that's true
Right.
for everybody. So, if people are wondering, like, well, why is John messing around with bonds right now? Or like, why is Chris bringing up the chart of the USD? Like,
Yeah.
that's not crypto. But it's like, I mean, you have to know when the black hole's going to show up in the sky,
Right. It's crazy.
Yeah, people don't even know what that means. People have just been trading for the last year. They may have accrued a lot of profits, but the market has a strange way of lending you money for sometimes years at a time.
Well, the market has been screaming to certain sectors, "Take my money, please."
Yeah, you know what? I'm going to throw a few of those charts up while we're talking through this because, like, if you look at the solar stocks, so the TAN ETF,
Okay.
at the bottom of the lockdown crash in March of 2020, it was just over $20 a share. Today it's at 100, and this is for a solar ETF.
Did you say TANF?
No, TAN. Just
Oh,
TAN.
oh, sorry.
It's a solar ETF. So I've been following this for a long time.
Okay.
And, I mean, this sector was dead for a long time. But here's
There's
what's rejuvenated it.
$20.
Is innovations in battery technology. And a lot of that coming from the electric vehicle space. Innovations in battery technology is driving solar. So if you've got solar panels hooked up to your house or your business or whatever, or maybe you've got a solar farm, you have to take that energy and put it into batteries, right?
Right.
Because the sun's not out all the time. So
Right.
how are you going to get power at night? You can be hooked up to the grid or you can have a battery bank. And
Right.
so battery technology is a very key piece of solar. And
Right.
so this move going on here has been driven by batteries. And you know what it looks like to me? You familiar with the head and shoulders pattern? Well, it
Hmm.
looks like a head and shoulders happened already in February.
I
And
see
now
it.
it's, making a new lower high and lower low. So a bull market is characterized by a series of higher highs and higher lows as the chart zigzags and stair steps higher. And we
Right.
saw that for a long time, but now it may be starting to work in reverse. And
Yep.
so what was above a lot of its key moving averages now is underneath them. So if you notice, now it's bumping its head on the 50-day moving average. The share price is below. So I've got on the upper left corner of the chart, you can see that I've got a bunch of moving averages here. Most of them are exponential moving averages, and then I have a 50-day moving average. It's a simple moving average. Here's what I'm looking at. Like when I look at this, I don't just look at the lines on the chart. I'm looking at where is the current price, 101. That's less than the 5 EMA, which is at 102, which is less than the 8 EMA, which is 104, which is less than the 9 EMA, which is almost 105, which is less than the 21 and the 50, right? So,
Right.
It's now the opposite. This looks like a downtrend based on, where the price is relative to all these moving averages.
Right.
And so now, I mean, this could be a good setup for. This has weekly options. maybe this is a place I should look to put on some bear put spreads. I
I
mean,
am
it's got
pulling up.
volatility. I mean, it's down 5.5% today, and it looks like a tiny little blip on the chart.
Right. Oh yeah, that does. I just put up my ribbon, moving average ribbon.
Yeah,
Yeah, this is looking
yeah,
pretty
it's
bad.
it's starting to flip,
Yeah,
and there's a look at all the volume coming into it.
I don't have volume up. Let me pull that up.
Yeah, there's a lot of volume coming into it right now. In fact,
Equities
you
volume.
know, most of this, the volume that's come into it since October, I mean, that money could all be underwater pretty fast if this thing
Yeah, I
has
see
a
it.
big leg down.
Hmm.
You know, and we're the phase right now where, like, you know, you could, the bull market ran for a year. I'm not saying the bull market's over. You can have some very serious shakeouts along the way, like the May, I think it was May 6th flash crash of 2010.
Uh-huh. I don't think I recall that one.
Yeah, well, the market fell like 10% in a 30-minute span, and it actually recovered like pretty much all of it in the same day.
Oh wow. Okay.
Yeah, it was wild. So, I mean, these kind of shakeouts are possible. And, you know, if you're just, you know, if you're a trend follower and you've got stop losses in, you know, that was when I stopped using stop losses because, you know, they were getting hit on these crazy flushes. You had stocks that would trade down to a penny. And so if you just, and then right back, if you just stop loss, then, you know, you essentially like came for your stocks and took them.
Wow.
So you find other ways of managing the trade than, you know, stop loss. You have mental stop losses. I mean, you could do trailing stops. You could still do stop losses, but you know, I decided to be a lot more careful about stop losses since then.
I don't use stop losses because they watch them.
Yeah, yeah, exactly. I mean, you're putting a signal out there
Yep.
for the
Stop hunters.
yeah, for the stop hunters. Yeah. So the screen's a little lagged. Um, if, so our audio is ahead of the charts.
Yeah, I'm drawing just a little bit, and while you're you're talking about this stuff,
Yeah.
and
So once you have it to where you want to speak to it, just kind of, you know, leave it sitting and
all
you
right.
know, okay, it should show now. You can speak to it. Go ahead.
All right. So while John was pointing out tan, its price structure got me interested when I put a moving average ribbon on it, and the first thing that I noticed is that it looks like a fan, a fanning out. Um, and what this is doing is it has found its top because the upper part of the fan has reached its most expansive part of this trade. So when Judd spoke about the head and shoulders, which is pretty much blatantly obvious right there, um, and the subsequent
Yeah, in
downfall,
January.
right? The subsequent in January, yeah, the subsequent downfall. I decided to do a little bit of other analysis, and what I did was I threw on a bottom finder and some other oscillators to see what this thing's going to do. So there
Yeah,
are
and it's looking pretty choppy.
two areas that I'm looking at. It is in a bear flag, but my colors of my candles have changed from red and yellow to green and yellow, which usually indicates that it's going to go up. Um, if if you wanted to hold off a little bit on this and see if it's going to break higher here, that would probably be a good idea. I would have my resistance set right here, and once it hits that point, I would sell.
So
And my
maybe set a price alert around 108 or 107.
right, and then if it bounces off of that level, then my next target would be 90 or 81.
Yeah.
So that's a trade that I was trying to that's just a setup that I was just looking at just now in tan.
Yeah, and so the other thing about solar is, this is kind of wrapped up with Tesla as well, because if people probably know this, that I think it's Elon Musk's brother runs Solar City.
Yeah, I heard some scuttlebutt about that.
Yeah, I haven't heard the latest or whatever, but the point is, the solar business is kind of it's linked together with the electric vehicle business because of the battery technology, right? They both need good battery technology, and the kind of
Yes.
batteries can be they can be used are slightly different too. So I mean, there's overlap there, but it's not 100% overlap. I was
I
listening
look at.
to an
Sorry.
interview that this guy, a YouTuber, Meet Kevin, had on. He's a big investor in the electric vehicle space, and he had
Hmm.
on a guest he was interviewing about. They were talking about the battery technology, and one of the things that this guest pointed out, it was a great point, is that when you have to have the battery in a car, then you care about the weight of the battery. You want it to be not too heavy. But when the battery's just sitting in a house, it can be heavy. You don't care necessarily. Like, what you care more about maybe is capacity and
Hmm.
some other things like that. So the
Deep
considerations are
cycle.
slightly different, but they do benefit from each other's research. So something else I
Hmm.
wanted to look at was there's an ETF, LIT, LIT.
Oh, I like lit.
Yeah, let's talk about LIT next. So I just brought up lit, and it looks like almost the exact same chart as tan.
Yeah, it does.
Yeah. So I mean, I would look to lit as confirmation. And by the way, like the volume patterns on lit is worse. It's even worse than tan, because there's almost no volume on lit for like all of 2020 compared to how much volume there's been in
Tan.
2021. So like if I flip to monthly bars,
Uh huh.
it's like huge volume in there right now.
Right.
So and it's also probably pretty clear on the weeklies. So yeah, and I mean, at some point, do investors want to keep sending new capital to invest in places that are already built up? I
Right.
mean, no. I'm going to call out an exception, though. Fisker, what's Fisker? FSK, I think. Yeah, no, it's not FSK. Although, wow, that's an interesting chart. FSK. We'll come back to that. Let me write that down.
I don't see it.
What an accident. Okay, hang on. Let me find Fisker real quick. So, I'm always talking about getting into new trends or emerging trends. FSR is Fisker. We'll come back to that, Chris. You could set up your lit chart.
Okay.
FSR. So I talked about FSR this weekend on the Trading Homework show, and the implied volatility was so huge because it had just had a monster breakout that I didn't like it. Well, guess what? Like it had a pullback on Monday, and I ended up getting into a swoosh position on it. We'll talk through that after lit. So the point is, I want to be moving into new breakouts, things that have been basing a while. I like to get into emerging trends because the 100th investor will make less than the first investor or the fifth investor in a trend like what we've seen with the electric vehicles. I mean, a lot of the early easy money's already been made. And now you've got the diehards who aren't going to sell no matter what happens with the price. And the new people, they're scared money, which is why they weren't in before. They're hopping in and out. Okay, so the video should be caught up. If you want to talk us through what you're drawing.
Okay. Sure. Um, what I have here is what I like to refer to as symmetry. I guess a lot of people do refer to this as symmetry, and it's something that I learned from Carolyn Barod. Um, so what's going on here is what I did was when this 34-day moving average decided to start diving down, just like this one did, because that was the first thing I saw. I decided to take a measurement from the high to the low, and it's 30 days at $16. Now, I mean, it's not going to be exact, but if you follow the same trajectory and you measure it to this line, and I'll get to this line in just a second, at 31 days, you're looking at about $18. And if you come back to 28
And
days,
that's
you're
right
still
around
looking,
March expiration too. That
yeah.
destination.
It's funny. A lot of my analysis has been going to March expiration. So, um, that was the first thing that I noticed. Now, where I got this bar from is if you go to I don't know how many of y'all have it, but there's a thing that I use. It's standard deviation. It's a default by the Thinkorswim
Yeah,
platform,
that's really cool.
and I just took the one standard deviation line. I drew it out,
Okay.
and I just found it funny that this measurement, which moved about one standard deviation, was pretty close to this measurement, which is
Oh
about one
yeah.
standard deviation. So that was the other thing that I noticed when I put on the ribbon. Lo and behold, we had the same similar looking thing. It's not as deep
Yeah.
as the
Some of those
the
faster
tan,
moving averages are now crossing under.
right?
And, this aligns with my read on Tesla, which is that, it looks like we're set for another leg down. And,
Yeah.
if that happens, I mean, look at that false breakout where we were seeing head and shoulders on tan. This thing had like a false breakout to new highs in early February.
Yes. Yep.
So, I mean, that's nasty. So,
Yep.
this is kind of where I'm going with this is, I'm expecting a range expansion and another leg down. So, I could be wrong, but that's the way that that I'm positioning with trades.
Right. So here's one thing. My has it changed over yet? Yes, it has. No, it hasn't. All right.
Yeah,
Well,
the video is going to be lagged.
all right. So another thing, I put my oscillator up on it, and I had my moving average crossover, which is great. And down here, um, that green line, the market forecast, has not bottomed yet. So that implies to me that this is going to go down farther. And I could show it to you over here with that symmetry that I was talking about
Yeah,
earlier.
so back in
If you
April, or I'm sorry, February and March of
March,
2020.
yeah, if you come down and you follow the original downslope like you have now, um, the money flow indicator and the RSI both dip below or close to the oversold condition, but the market forecast line didn't, and it came back up for a couple of days, and then it rolled over again, and that's when I got my signal on the RSI that it was oversold.
Yeah,
So
and that was a crazy drop too. That was the lockdown crash is when that was happening.
right, so gauging by that, plus the symmetry, plus the standard deviation moves, I would venture to say that this is not over, that there is more downside. So what is
Yeah.
our SRs? You got one there. You
So
got
here's
one
something
there.
else too about the March expiration, Chris.
Yeah.
Is the market had a lot of money came in to make that market bottom in March,
Mm-hmm.
and to people like me, and I mean I don't know that you and I were talking a whole lot back then. I don't know exactly what views you had, but I mean for me it was pretty obvious that there was a major market bottom, and it might be worth doing a weekend show where we looked at all those factors that were factoring into that take
Sure.
and going through and looking at old tweets from back then. So I
I
mean,
was
I'm not making
way
it up. Like I mean, I was like loaded the boat in March on like that third week, and that was the bottom. But where I'm going with this is, it will have been a year Okay, so people can sell for long-term capital gains pretty soon.
Maybe.
People who are buying and off that low. And so I think that what we're seeing is, we're starting to see selling in anticipation of that. In other words, like the people who don't have anything close to long-term capital gains, the people who
Right.
are getting into these positions late, they're now selling them to get out in front of the people who are going to sell to take the long-term capital gains between March expiration and April expiration of this year.
Mm-hmm.
And there was a similar effect, by the way, after the 2009 market bottom. Okay, so about a year later is when we had the flash crash of 2010.
Oh, okay. Now I see. I see what you're talking
Yeah,
about.
and a lot of things started sagging and selling off before then. It was right around a year later.
Well, didn't Ebola have something to do with that, or
In 2010,
something out of Africa?
no, that was 2014. It was late 2014 and 2015.
Which one was the 2011 thing?
The 2011 thing where it was two things. So there was the Fukushima, that happened in March. And then, so the Fukushima reactor meltdown. And
Is that what
then
that was?
at the same time, there was like an echo crisis in European bonds. And specifically around some of the peripheral countries like Greece and Italy. I mean, they're in fact, the bond yields got so high on the Italian bonds that actually blew up a brokerage, Refco.
Okay.
That was or no, it wasn't. Was it Refco or MF Global? I think it actually might have been MF Global.
Yeah.
But I think
Yeah,
Refco blew up too.
I never heard of Refco.
Yeah, Refco was a Forex broker.
Okay.
So, yeah, there was MF Global blew up, and I think Refco blew up too. Right around maybe around the same time.
Okay, I could have swore that there was some epidemic that was associated with the 2011, 2012. Was that MERS?
Oh yeah, it was SARS, right?
No, I thought it was MERS. SARS
was
was
it? Yeah, you could be right. It might have
SARS
been a
was
factor at that time too.
2003 and then 2005 or 6 or something like
Yeah,
that.
yeah, maybe that's when SARS was.
And then I thought there was Ebola, and then there was first MERS, and then there was Ebola. I'm not exactly sure on the timeline.
Yeah, it's
But
funny.
either way-
You can look back at the chart and you can still pick out these events on the chart.
Yeah.
Like 9/11, you can pick that out too.
Yeah.
If you look at, sometimes you have to look at a ratio chart. Like if you look at the NASDAQ to silver chart, that has like different tops and bottoms.
Oh, I
The
never
gold
thought
to
about
silver
doing that.
ratio too.
Okay.
Yeah, you
I
can
know
pick
about
out
the
like
gold-
really salient events on those charts sometimes.
I know about the gold and silver ratio because of you. I had never even really thought about it.
Yeah, another interesting one is the NASDAQ to silver ratio. I mean that's a wild chart. I'll throw it up real quick on the screen.
Yeah, get rid of mine because it's stuck like Chuck.
All right.
It never got to what I wanted to show.
Oh yeah, I didn't finish talking about this Fisker thing, but anyway, like this is, instead of buying Tesla, I'm not buying Tesla at at 700 or 800 or whatever it is. I'm getting into Fisker. I just established a position in Fisker.
What is Oh, it just changed.
Yeah, so Fisker is an electric vehicle maker, and I mean it's new. This is like an IPO or something happened here at $10 a share, and yeah, now it's almost 30. But I got in this thing around 25 or 26, just above this old high. So will it keep going? I don't know, but if there's any room left to run in this sector, it's this stock could really move. I mean, it's got a great volume pattern to it. And I did it with a swoosh position too. So that's where, I'm buying a long dated at the money call, and I'm buying a slightly out of the money short dated put. And so the put is cheap relative to the call. And if the stock runs up, then the put essentially evaporates and kind of becomes worthless, and I don't have protection anymore, or
Right.
it's not effectively protected. But the nice thing is, if the stock goes down, then I can basically reset my entry price lower, and because I have that put. And the other thing is, like, my initial capital is protected. So putting on the trade in that way acts very similar to like putting on a like buying a breakout and putting a stop loss like 10 or 15% lower on the stock. It's very similar to that.
Right.
All right, so flipping back to let's look at NASDAQ to silver. CompQ colon. I'm on stockcharts.com. I'm doing dollar sign CompQ, then I'm doing a colon, and then I'm doing dollar sign silver.
Oh, I'm sorry. You know what? I don't think yours works the same way as mine. I have to do it differently.
Oh,
So
yeah. These are the symbols for stockcharts.com.
All right. So what is it? It's GLD. What?
I mean, if you want to let's look at QQQ colon SLV. That's pretty much the same chart.
Okay, QQQ. I got to pull that up.
Yeah, and then I don't know if can you look at a ratio on there?
Yeah, I'll put up percentages.
Yeah, cool.
All right, so add start SLV, right?
Yeah.
Okay.
And so, the NASDAQ's not really making much ground against silver, and it hasn't really since 2018. So, I mean, that's pretty interesting. If you consider that, like, here is silver, like, kind of near the lows, and the miners are down a lot. Like, it's not like silver's $40 or $50 an ounce. It's I mean, maybe the physical, but paper silver is not. And so, the NASDAQ is not really making a whole lot of ground against silver. So, and in fact, like a lot of the minor investors and traders and portfolio managers that I follow are doing great in the metals. Like, even though the miners are like, they've been down. They're down a lot since 2011.
So where's your silver at? Which line is that?
It's just a ratio chart, so it's not showing both of them.
Oh,
yeah. Here, let me flip over to yours though. Okay, so yeah, you can see what I'm saying. So Chris has it drawn with the QQQ and the SLV on the same chart, right? And
right.
So what's cool about that is you could see that what I was saying about the ratio chart is also true here. Like, the NASDAQ's not really making much ground against silver, although silver is much more volatile.
Yeah, it is. Yes, it is. The silver is purple, and the NASDAQ is the candles. And go ahead, John. It's all you.
Yeah. So one thing about silver, is you could see these disorderly rises. It's got some disorderly drops too. It's super volatile. It's one thing I actually like a lot about silver.
Yeah.
There's a lot of opportunity there. But the tactic I'm using now, and I don't know if it's going to pay off or not, is I'm looking out into 2020, early 2022, and I'm buying out of the money, like pretty deep out of the money calls on the miners. And the idea here is, if silver has a big run, the miners are going to be the best performing sector, probably. Like, if silver does what it has done in the past, then the silver miners are going to be, they'll probably be outperforming everything. Little known fact: mining shares were one of the only things that did very, very well during the Great Depression. So, am I suggesting that we're going to have a Great Depression now? No, I'm not suggesting that, but.
Oh, you never know. I mean, there is a massive amount of new money out there. If you look at the M2, it's just ridiculous.
Yeah, and I'm looking at, like, here's what you can expect, or here's what I'm expecting, is if silver has a run higher, that the miners are going to double, and then they're going to double again, and they're probably going to double again. And so by buying out of the money calls with enough time on them, and I'm putting almost a year on them. And once it gets close to about 6 months out, if those calls are not at the money, I'm going to roll them out. If there's still a good amount of time value left, I'll probably end up rolling the calls further out.
Can you click on that chart that you're showing?
Which one?
Just touch, click on the chart that's
This
my
one?
chart. Yeah, my chart.
Oh, your chart.
There we go. That's the M2 stock.
Yeah. And I think maybe this is I think they revised how this is handled or how it's computed, but still, I mean, what you're pointing out is, it looks ridiculous.
I mean, especially from February 10th of 2020.
Yeah, essentially the lockdown crash is when it really went bananas.
Yeah, I mean it literally is straight up, and went from 15,000 to nearly 20,000 in the span of a year.
Yeah,
That's just
wild.
absolutely
It's really wild.
Insane. So you were speaking about silver, so I just had to.
Yeah, this is a great data point, and it's. The other thing about it, a key ingredient here is that with the silver price being relatively flat for as long as it has been, that sends a signal to the miners essentially to curb their investment. Okay, like the miners are, they're how do I put this? I mean, I'm not a mining shares expert, but when a sector that is cyclical goes out of favor for a long enough time, what happens is, they lay off staff, they close down mines, things like that.
What is a silver miner? Like pause?
Yeah, AG is one.
Okay, AG.
Yeah, so this is Majestic, First Majestic. Yeah, so this is one I'm buying. I'm buying the 35 calls in 2022, January.
Yeah, click on that chart. I think when you click on it, it updates.
Yeah, maybe. That may be. It should catch up to you here in just a second. So, what happens, the reason this is cyclical is because when the miners do things like close off mines, lay off staff, there's a lag there. And the longer silver is down, the longer these miners, they have mines that go idle. They sell them off, they close them up, things like that. Well, now there's not as much silver coming in now because of that. And then we get into a situation where if there's a large short position in the marketplace, and a lot of people say that there is. Well, there's not a whole lot of supply coming in from the mines compared to what it would have been if silver had been allowed to rise higher, if that short position had not been there. So anyway, I mean, it's just an explosive situation right now. And I'm going to show a chart of, let's look at AG.
Before you do that, real quick.
Oh, go ahead.
If you notice silver or SLV in comparison to AG, AG has always had to catch up to silver, and a good point of that is this most recent rounded bottom.
Yeah, right. It looks like it could overshoot and be not at 17, but at or that's a different scale, right? The scale for okay, yeah, it's on the scale for AG is on the right side, and the scale for SLV is on the left side. So yeah, I mean, if silver pops up to 30, I expect AG to overshoot, and those calls will be pretty close to at the money in a hurry.
Yeah. Yep. So I wanted to point that out. Go ahead to your your other chart.
I don't know how long it's going to take, but the point is, like, it can have some crazy runs. I mean, I had This is one of my biggest positions ever in as far as like quantity of contracts wise in
Right.
SLV. For what I had was August 22s. And
Okay.
at one point, I had probably half the open interest or more of the August 22s of 2020.
Oh,
Yeah.
all right.
Yeah. I mean, I probably had, I don't know, half of it or more.
Wow.
And I sat on it for a while and then it went bananas. And I mean, I just made so much money off that trade. I mean, it was ridiculous.
That's awesome. That is awesome.
Yeah. But
So,
I don't see quite that explosive of a setup on silver right now. For one, and for two, like I mean, it was setting up and building a base for a long time. It was like, all these things kind of aligned, and I wasn't anywhere near as good with options back then as I am now. Like if I had that position today, I could have managed it a lot better and made so much more out of it.
right.
But
Fully
um,
understand.
I mean, I don't know that I would have got into it in the first place now.
Uh-huh.
But
Yeah, this chart that I have up here now is like very indicative of what is to come.
yeah, and you know what it looks like? I'm glad that you have this up. Because looking at probably the last third of that chart, guess what it looks like? It looks like the GameStop chart did intraday. It looks exactly like it. Right when I put on that GameStop trade last week.
Oh, really?
Yeah, so I mean, all it looks like almost identical. Like this is exactly the chart I wanted to show. So
Wow.
what I mean to say about that, Chris, is even the big run up in 2011 looks like
Uh-huh.
the exact same spot on the chart when GameStop ran up to 450. It's like the same distance away.
Oh,
So hang
wow.
on,
Okay.
I'm going to find that chart. I'm going to bring it up and
Okay.
overlay it on what you have there. So stand by. Don't scroll that chart.
I already did.
Okay. Well,
I'm already at something else.
oh no, because
Yeah.
I want to show like how similar that is to GameStop.
Well, you know what? I still have the silver up, so I
Yeah,
will
yeah.
just
Just keep it right there. No. Back that up.
I can't. Oh, you know what? Click on it again.
Okay. Yeah. So you had it zoomed way out where we could see even like 2011.
Yeah, I did.
That's what I was hoping to see.
So you want me to keep it there?
Uh, yeah. If you could zoom it back out.
Yeah, sure. Let me do that.
Okay.
There you go.
Yep. Perfect. That's the one I wanted. All right. So, new chart. GME, I want to look at 30-minute candles. And I'm going to scroll back. Maybe I need to look at more than 30 minutes.
I'm on a weekly here, just so you know. Is that GameStop?
Yeah, it's GameStop.
Wow.
Okay, so see this big move, and then the stock kind of like goes sideways, and then it has
Yep.
this like huge explosion. Well, watch as
Yep.
I zoom in, okay? Like
All right.
if
So is that 2011 right there, or what is that? It's
uh,
hard for me to
yeah, what
tell.
I'm pointing out here is this GameStop run up
Oh,
in
that's February.
in
Okay.
January, in late January,
Uh-huh.
corresponds to the big up move in silver from 2011. Okay, and if you notice, like after some time passes, it calms down. It's calm and has a real like all the implied volatility comes back out of it, and
Uh-huh.
that kind of resembles what has happened with silver. And I want to show you now. I'm going to zoom in and show you the base before it broke out, and it looks just like this period from 2016 to now on the silver chart. So let me zoom in. I'm going to look at 30-minute chart now. And I want to look at... Gosh, I need it to be right there like that. Okay. So now what I'm pointing out is, you see this base right here, Chris?
Where do you want me to zoom into?
No. Don't zoom in yet.
Okay.
I'm gonna overlay it. Okay.
Okay.
Oops. So it's not quite a perfect overlap, but the point is, like, if I draw a line across these peaks at 48 on GME, it broke out and made like a handle, okay, above that level. I wish I could. Can I just click it over one at a time? Nope.
You know what? I could raise mine.
Okay. Yeah, that could help.
Okay.
Okay. Yeah, so this horizontal line right here, and then if I zoom in even more, let's go down to like a 10, 15 minute, okay? Yeah, here we go. So you can see that it moves up, and then it forms this base and just keeps hooking up and then explodes higher out of it. That's what it looks like silver may be doing right now. Is, it's consolidating above that green line at 21.
Okay.
And it's now curving higher. Now, if the pattern holds, then it shouldn't get much weaker than it is now. It should start to go back up. And as it comes across that high right here of this sort of initial move,
right
at from, it looks like February 20th. I think that's when we had that big Monday morning gap up.
Okay.
Yeah, yep. I think that's kind of setting the stage for it. But we need to see continued strength in silver. Like, it should not be weak in here. And if it goes back down and touches 21 and a half, then the pattern is kind of broken. Like, it shouldn't be retesting down at those levels anymore. So if it keeps on creeping up, we could see a huge explosion higher on silver. Now, it doesn't have to stop when it gets to the old high. It could keep right on running. But, in the case of GameStop did not go all the way back up to 450. At least not yet. So,
yeah.
Anyway, yeah, it just, to my eye, it looks like a similar pattern.
On the daily, does that look like, because I have the weekly up and I don't want to move it yet. Does the
daily look... You can go ahead. You can change it to whatever you want to look at.
I just want to see if the daily looks like a cup and handle yet.
Okay.
Yes, it does.
Yeah. And so, if what I'm saying holds, then it shouldn't get really hardly any weaker at all.
That is looking like cup and handle right there to me.
Yeah. Like these are the last of the buy points if the analog holds, right? So we would call this an analog model. Is looking at that zoomed in GameStop, saying, well, that's like a short squeeze situation. If silver also is a similar short squeeze situation, then we're kind of at the point where the shorts, they may get squeezed real hard here.
It's a massive amount of money, though, you're fighting against.
Yeah, but if I'm right with my hypothesis about who these players are, it's the same folks that squeezed Overstock from $2.50 a share to over $100 a share in a 5-month period. Yeah. Starting with from March until August of 2020. And then they moved on and started squeezing GameStop for a 5-month period. And they squeezed GameStop shares from around $4 to like $400.
Right.
And now I think that, after those two operations, they should have a big enough war chest to move on next to silver. And I mean, because like, thinking that this is Reddit somehow doing all this, I just don't buy it. these are deep pockets doing it. And I'll tell you who I think it is. I mean, I think Richard Byrne is a central figure with what's going on with these short squeezes.
Who's Richard Byrne?
I'm sorry, Patrick Byrne. I said Richard, but Patrick Byrne.
Oh, okay.
Patrick Byrne is the former CEO of Overstock.com, which was the first one to get squeezed in this series of campaigns. And if you notice, they don't happen at the same time. They're happening kind of in a serial fashion. So I'll show it on the charts so everyone can see what I'm talking about. It might take a minute to catch up with you, but so Overstock.com. This is the company most known for being naked shorted. And Overstock.com is still in litigation with Goldman Sachs and others for alleged naked shorting.
Oh, I thought that was Bill Ackman and HOF.
That could be.
I'm
But
just messing
Overstock.com was at least the longest story for, they've been in the news for naked shorting since like 2005.
Oh, wow.
Yeah. And so, I wasn't too familiar with Patrick Byrne other than, former CEO of Overstock.com.
Right.
And he's recently been in the news for being in a lot of closed door meetings with Donald Trump. So he's now in Trump's inner circle. And if you look at this. It's what I'm saying. From March of 2020 until August of 2020, the shares went from $2.50 to almost $130.
Yeah,
a
that's
share.
crazy.
I mean, almost straight up. And this stock, I mean, probably it's the naked shorts got squeezed out of it. It wasn't even doing anything really all that exciting before then. People have been shorting it down, right? And then the COVID crash happens, and then someone squeezed it. They squeezed the daylights out of it, all the way up to like probably all-time highs.
Yeah.
And I'll tell you, Chris, I don't remember people talking about this when this was going on.
Yeah, me neither.
This was off the radar. This was not a Reddit thing. And now,
thing I knew about...
pay attention to this date right here, August of 2020. Okay? Because if you notice, Overstock stops getting squeezed. Okay? It actually falls in half. Whoever squeezed it wound down that entire thing, and the share price fell in half. Okay? I mean, it's still up a lot. I'm guessing they wound down the entire thing, and guess what? Started moving it into GameStop. Because look, GameStop started edging higher in August. And if you knew how to find these companies that are being naked shorted, there's actually like telltale tracks. And this is what led me to identifying Patrick Byrne as a key player in what's going on in the markets right now. Is it's the failures to deliver.
Right.
And so failures to deliver is, if you just scan through that data, then that's how you can find where these companies being naked shorted are. So Patrick Byrne will have most certainly known this. And so if you look at this stock has made like a perfect base. It did not rally off of the March lows, really. I mean, it just kind of bounced around. And but in August, when the Overstock short squeeze got unwound, guess what? You could see this money coming in slowly at first and then really fast, and it just starts rising higher. And GameStop went from around $4 a share to over $400, and then now it looks like they've unwound that one, maybe gave it one last squeeze, and they may still try to squeeze it higher and do a Volkswagen type of thing. That's possible. They'll do it if they think they can. But it looks like what's being set up now is, if you really wanted to, let's say you had political motives. Well, ultimately, your goal is probably to short squeeze silver. I mean, that's been the big game versus the Federal Reserve the whole time. It's their Achilles heel. And, whoever is doing these short squeezes, I think they have a big enough war chest now to do silver. And that's why we're seeing the physical markets get really tight, tighter than maybe we've ever seen.
Right.
And no one's talking about this. I haven't heard of anyone else put all these dots together but me.
No, that is an interesting um what's the word I'm looking for? Thesis, I
Yeah,
guess would
and
be the
that's all it is
closest.
the thesis, right? It's. I already did a
But
trading homework. It was one of the first ones. It was either the
it
first one or the
lines up.
second show where I walked through connecting all these dots on Overstock.com and GameStop. I even
Right.
looked at insider sales records, and they aligned with big moves higher in GameStop to the day.
Well,
Yeah, so I think it's a lot of the same people, and it's not just Patrick Byrne. And I don't know for a fact, other than he did tweet out, by the way, right around the time where I started connecting these dots. He said, for people who are interested in the real story behind what's going on with GameStop, take a look here. And he redirected to his website, his own website, Deep Capture.
uh-huh.
So, I mean, that lends a lot of credibility to my story.
Absolutely.
So,
Absolutely. Now, your idea that GameStop is going higher, um, I go on WSB Reddit boards, and there is more than one now, and it's going to be hard to know which one is doing what. But
yeah.
they are chattering recently about 1,000.
For GameStop,
But
yeah.
yeah, that doesn't
Yeah,
mean
I'm in
that
this too, by the way. I have a position right now.
that doesn't mean that it's going to get to 1,000 by any means, because between the retards and the tendies and the smooth-brained
Oh,
aerodynamic.
yeah, it's all just garbage. I
Yeah,
mean, I don't think that hardly any of them are putting together the real story of what's going on here. I mean, there's
no,
probably a handful of people. And what originally tipped me off was one of the posts, a due diligence post on Wall Street Bets about the failures to deliver. That's what pointed me to start connecting the dots with Overstock. And
right.
so, just having the thesis that there's a rolling series of short squeeze campaigns here. Let's say that they do short squeeze GameStop to 1,000. I mean, that's been the goal all along, because if they can get it up there, it's gonna tip over the entire stock market, which is like every time this pops now, the VIX starts shooting up.
Mm-hmm. Yep,
And if you're going to
absolutely.
squeeze silver, you're going to want to do it at the same time the stock market's tipping over, because that's really the way to do it. Is that takes us back to the Nasdaq to silver ratio. So
Right.
comp Q colon.
The only time that the silver has gone up lately is when the market goes up, which is interesting to me, because those two used to be inverted, and for some reason now they're correlated.
Yeah, it flips around. I mean, if you look at this, there's a very long term cycle here, and I'm going to zoom out on this chart as much as I can.
Okay.
So yeah, look at this. This is great. It'll probably take a second for the chart to catch up to
No,
you.
it's already there. I see it.
Yeah, so if you look, I mean, this thing has some major cycles to it,
Huh.
and I've been kind of waiting for this to turn since 2018. I've been watching this,
Now,
and
what exactly am I looking at here? Because
this
I
is
only
the
see
rate.
one.
So if you take the Nasdaq index value and you divide it by the spot price of silver,
Uh-huh.
that's what this is. So it's
Okay.
literally a ratio chart.
Okay. And what does that tell me?
Well, think about it as a race. So when this chart's going higher, it means that the Nasdaq is outrunning silver. And when this
Okay.
chart's going lower, it means that silver is outrunning the Nasdaq.
Oh, okay.
Yeah. And
All
so,
right.
they may both be up or both be down, but if one but if the Nasdaq is up more than silver is up, then, this chart will rise. Or
Okay.
if silver is down and the Nasdaq is up, this chart will rise even more.
Okay. I
Yeah,
got you.
so it's a super helpful chart, but the point is it trends. There's major trends in this. I mean, look, there was a huge bull market in the metals in the late 70s. And if you look when this chart starts, it starts just as that bull market in commodities was coming to an end. And there was a 2 decade run, and then silver had a big run, and that lasted for 10 years all the way up to 2011. And then there was a bull market a bear market in metals from 2011 on, and you could see that this chart was rising. Well, now I
Right.
think it's turning, and it's taking a long time to turn. But I think that it's, if this heads lower for, let's say, 10 years time, or it doesn't even have to take that long. But I mean,
Mhm.
I think that probably we're at a major turning point here for this chart.
Yeah, I'm looking at the RSI in relation to the price action.
And so when I talk about buying uh, out of the money calls, like deep out of the money calls on the silver miners, what I have in mind for that is a campaign to play for this chart to make a downtrend for about a 10-year run, 5 or 10 years.
Okay.
In other words, like I'm looking for a multi-year bull market in the metals. And if it comes later instead of now, I can always roll, or I could just keep on buying further out on those
Right.
options, and then when it does happen, then I'm positioned properly for it. So
Now, what does that do to the silver bond correlation?
uh, so silver and bonds correlation. So with TLT, like so this is long term government bonds.
Right.
We have to talk about the yield curve here for this. So, in the bull market in the 70s for precious metals,
Hmm.
um, short-term interest rates were rising, and they were rising to try to chase the long-term interest rates. So, what can happen to a government bond market? And it looks like this may be happening or starting to happen now. What can happen to a long-term government bond market is, the central bank controls the short end of the yield curve, right, through open market operations.
Right.
And what happens is the market itself is mostly controlling the long-term rates, because it's a second-hand market that drives that. And so TLT is mostly driven by the second-hand market, right, or secondary market, which is
Right.
it's the institutions, the people running 60/40 portfolios, the risk parity funds,
Mhm.
mutual funds, pension funds. They're the ones driving this market for the most
Right.
part. And so you're here on FinTwit right now talk about yield curve control, or YCC.
Uh-huh.
And what people are talking about is, um, the Fed is very interested in keeping short rates pinned near zero. Well, the problem with that is long-term rates are rising, which we see as TLT sells off. So TLT's been selling off pretty hard. If you zoom in and look at a daily chart, it looks
Right.
super ugly.
Yeah, it does.
It looks pretty bad ever since 2021. It really has been falling. And so when people talk about yield curve control, what they're saying is the Fed isn't going to raise the short-term interest rates. They've made that clear. The forecast is short rates are going to stay at zero. So what
Right.
else can they do? They can extend the duration of what they're buying, uh, and that's got a bunch of side effects. So what that does is they try to keep the entire yield curve low by increasing the duration of what they're buying and keeping on their balance sheet.
Hmm.
Well, this is very, very inflationary. So it would be a big driver for a long-term bull market in the metals. And eventually, interest rates have to rise. It's the only thing that will stop it. So when we talk about the bond market, there's really a bunch of different dimensions to it. So this stuff is all real bad news for corporate bonds. And when corporate bonds rise, that hurts the stock market. And so that's why, going back to that other chart, let me put that back up. Comp Q : silver. So when I look at this chart, what's a driver for this chart to be dropping for a decade is when it gets expensive for companies to borrow. Why would it get expensive for companies to borrow? Because, is the Fed going to start buying corporate bonds like what they're buying? Are they going to? They're hoping to price out pension funds out of the long-term government bonds and push them into corporates and things like that, munis, things that the Fed does not want to buy. You see,
right?
And so there's a whole risk spectrum inside the bond market. And when the Fed says, "Hey, we're determined to keep short rates at zero," well, that's how you get a long-term downtrend in this chart. So, I mean, I'll put it another way. Like, if real interest rates, not nominal interest rates, if real interest rates are 5% and the S&P 500 is paying 2% dividends and corporate bonds are paying, let's say, 5% or less, for investment grade corporate bonds, I mean, where do you want to go? You're losing money on a real basis. And so it really hammers the corporate bond market. Inflation does. So let's talk about this, because I didn't get to this on the weekend show. I noticed something I wanted to point out. So I'm over on Yahoo Finance right now, and I'm going to go to SPY. And you can see here the yield on SPY is showing 1.54%. And because TLT has been down so much over the last month and a half or 2 months, the yield on TLT is now 1.50%. So if TLT goes down any further, it's going to push the yield higher than the dividend yield for the stock market, for SPY. This is like a really important data point.
Yeah.
And, we should probably also look at TIP. So TIP is yielding 1.17%. It's actually hard to get a good read on TIP yield, but I'll show you a trick I use. Let's go out and look at a weekly, and I'm going to do a ratio chart of TIP to TLT. And what this shows, by the way, this is a really helpful, it has been a helpful chart for me, is this shows when there's
market data connection reestablished.
When there's inflationary pressures, then this chart will rise, and when there's deflationary pressures, then this chart will drop. And so if you look, like for every market crash, this chart goes down because TLT is shooting up and TIP is not, or TIP may be going down because TIP has a correlation to gold. And so this can help, for getting a read on where the bond market is heading. So when TLT is outperforming, then this chart's going to be falling. And when TLT is underperforming, then this chart's going to be rising. Yeah. And so think of it this way, is when this chart's rising, inflation is winning the race.
Market data connection lost.
Okay, well then inflation is really winning because I'm looking at the RSI on the top.
Market
and it's never
reestablished.
It's never broken. Oh no, there is a spot.
Yeah,
right
you're right.
I mean,
it's at a really high level, and so it's this could run for a long time. Like overbought can stay overbought for a long time. It would not surprise me. I mean, this could run all the way back up to these levels of the 1.2, 1.3 range. And look at the velocity of this rise. I mean, it's fast.
Yep.
And we don't have a divergence on MACD. MACD's not rolling over or anything.
Yeah, I see that.
So
Is that a daily?
this is weekly. Let's look at the daily. Yeah, I mean this is furious. This is a furious rise. It's being driven by two things. It's being driven by the metals going up, okay? Because tip is you can expect that to move up when the basket of oil and gold are rising. You know,
Let me see if I can pull up
correlated to that.
Market data
I guess it would be a
connection
dollar
lost.
sign tip for me.
Maybe it's an ETF.
Oh, it is an ETF.
Yeah.
It's just tip. Okay, I got it.
And so think about this: like these two bond funds are competing with each other. TIP and TLT are competing for investment dollars. And so forget for a minute this is a dividend yield adjusted chart. And so like when a dividend gets paid out, it pushes the chart for each one of these down. And so, when TIP is so cheap down here relative to TLT, it's a lot of investment dollars are going to go there, and we're seeing that.
It's not very liquid.
Yeah, it's not, but I mean, tip is a big deal. It's for government employees. They have what's called like postal workers have a thrift savings plan, which is sort of like their pension.
Well, I take that back. That March 19th, the March monthly is loaded on the call side.
Yeah.
Ridiculous amount of open interest.
So government employees, including military, I don't know if they have exactly the thrift savings plan, the military, but the Postal Service does. And they have a few options. I know a little bit about this, but so they can go into like an aggregate bond fund, or they can go into TIP, like inflation protected. The inflation protected securities is an option for military to put their retirement funds. And so if you think about like, that video game Tropico, I never really played it, but I think there's an option where, I think one of the goals of the game or something you could do is, you're essentially like a dictator in a banana republic. Okay. You're like some military coup general who took over the island, okay, of Tropico.
Okay.
And
Sounds like
it's
Venezuela.
kind of like The Sims.
Okay.
But what you're really trying to do is you're trying to max out your Swiss bank account with Swiss francs.
Right.
And if you take a look at the Swiss franc and compare it to TLT, you'll find that it's so highly correlated that the Swiss franc may as well be TLT. Okay, so the evil dictators or corrupt generals Swiss franc fund, the equivalent of that for the U.S. military is the Treasury Inflation Protected Securities, which is TIPS. And you can buy it too, right? You can buy TIP. So here it is. It's an ETF. You can get it. It moves slow. It's slow as molasses, but it does better during inflationary periods. So
it didn't do so hot in March.
Yeah. Well, for good reason.
Yeah.
I mean, oil was crashing, and so
yeah,
it's going to be correlated to oil. But the Swiss franc ETF is what? XF. Yeah, here it is. FXF is the Swiss franc ETF. And not so much anymore, but it used to be that if you put that next to TIP, that it was like almost the same chart. But the Swiss franc has gotten a little funny. So I think they actually it used to have like a link with gold, or they had more gold reserves or something, and that kind of fell apart. So the Swiss franc as kind of a haven for black money, that all kind of fell apart. And probably it was right here in 2015.
Black money?
What's that? Oh yeah, like black market money. Or like dictator funds and things like that.
Gotcha.
Yeah, their little hidey hole used to be Swiss bank accounts, right? So anyway, the Swiss franc,
I thought you
as
said
you can
France.
see, is now
I didn't realize you were saying
underperforming TIP.
Swiss.
It
I'm
has
sorry.
been for a while. But
Right.
it used to match it. Like if you look if you look back at like all the way up to around 2014, like it got loosey goosey, starting in the European the European financial crisis of 2011, which we were talking about earlier. Like that was really kind of the end of this link with TIP, where it was super highly correlated. It was almost the same thing. And once the euro kind of like started to break around the periphery, that really kind of spelled the end for the Swiss franc, and then it's been in a downtrend ever since. So really fascinating stuff. A lot of history there.
John,
Yeah.
can you look down at your phone?
Oh, yeah. Yeah, sorry, dude.
No, it's all right.
Let's see here. Yeah, cool. Yeah, why don't we wrap it up here? But it's been a great broadcast. I'll tweet out this link, and if everyone watching, hey, please subscribe. Please share
absolutely.
the video and hit like. Follow Chris at STFR Trader on Twitter. That's Sell the Fucking Rip. And I'm at John Tate, JONTAIT. Thanks for listening. Oh, and Chris,
Man, I had a really
bit
good,
about your new trading room. Just tell
I
everybody
had a,
about your
I
new
had a
trading
really
room.
good time on this one. This was a good show. I really, really liked this one.
Yeah, thanks. Hey, tell everybody about your new trading room real quick
All
before we
right,
sign
so
off.
yeah, my trading room runs from usually around 9:30 to 4 o'clock. I'm in and out of the trading room. Sometimes I leave it up, sometimes I shut it down. But if you send me a tweet that you want to come on and I just happen to be off because I'm, screwing around or doing whatever, I'll jump on if I'm not on. I am most active in the morning between 9 and probably around 12 o'clock because that's when you're going to get most of your up and down moves, your volatile moves. And
Yeah.
I'm not talking extreme, but there's a lot of positioning that you can do for the rest of the day in the morning. So that's when I'm most active. And that's about it. I'd
Yeah,
love
and
to
there's a
get some
link
people in the room.
in Chris's Twitter bio, and I'll try and put it in the description for this video for people who are catching the replay. And so, yeah, this is trading homework. Like we're preparing for the next day, and Chris does a live show. So
Yeah, during market hours. Yep.
yeah, during market
And
hours.
every
Awesome.
every
All right.
so
Well, thanks everybody. Thanks for watching, and awesome show, Chris. Thank you for coming on.
yeah, it was a good one. I